Rajivji, we were just reading in the morning in the papers
हाँ जी.
that all realtors are increasing prices by 10 to 20% because of rising input costs. That's quite serious for the economy, right?
Yeah.
You know,
Actually, you've seen that cement and steel
yeah,
have skyrocketed. And that's the basic material, so you can't get it cheaper.
right.
Yeah.
China is affecting us in more ways than one. Whole steel price rise is purely because of the huge demand from China. And in fact, the steel industry is saying, why are we exporting ore? We should, China itself is conserving its natural resources, wanting to absorb resources of the world, and steel industry is actually facing some cost pressures, but of course huge demand from the export market.
Yeah.
And cement, of course, it's always been a very puzzling story why a commodity never goes down, right?
They definitely have a cartel, but they've been able to win cases despite that.
Sir, I'll tell you, the CCI passed an order after an 18-month study concluding that there is price collusion. The next day, one of the cement guys went to court and got a stay.
There you are.
This is all in the public domain. So if one studies the ROI of this industry, given that it's a commodity, it's crazy. I mean, they earn more money than probably developers.
So anybody, who has a monopolistic hold of our market.
Right.
And unfortunately, this has happened across the board for all primary products. Chopra ji, are you also addressing this issue in some manner today in your speech?
The pricing one?
Yeah.
No, I leave it to you for that one.
Okay.
Because it is a relevant point. It is in fact there in my points, but I have so many, like you said. So that one, I'll be happy if you take it up.
Okay. Okay.
In fact, Chamber ne apni list mein, like you said, because Chamber has been making representations, in the points they gave me, they have written that rise in commodity prices. I'll be happy if you take it up.
What time are we starting? Is it 10 or is it, because it's 10 already?
I think we are waiting for Chief.
For our guest, especially Amitabh Kanji, right? So will somebody check up Dr. Sharma?
And what about Deepak Bagla? I think he's the other one.
Yeah.
He's speaking in the first one, so I hope he comes now, but maybe he chooses to join a little later. But Amitabh ji ka abhi hai. Rajiv ji, thanks to you, we were able to get him. It is only
but
persuasive powers. Appreciate.
May God be kind.
No, aayenge. He said he will come to you, then he will come. And he has confirmed that.
Actually, I told Mr. Sharma also to send a person there to coordinate.
Sharma ji, escort ho raha hai?
Yes, sir. He is with the cabinet secretary right now. He'll be free after 5 to 10 minutes. Then he will join the office.
No. 5-10 minutes, so we are okay. We are
There was a very interesting article last week by Gaurav Dalmia, in which he said that the actual movement in China began somewhere in the time of Mr. Deng Xiaoping, who gave a call that to get rich is glorious. And that changed the philosophy of communist China. So maybe we need something also which should shake up everyone. Good morning to Alok. Is he from the car?
Yes.
Yes.
Yes. Morning, Alok ji. Morning,
Yes.
Kanika.
Good morning, Kanika.
Here that I was very pleased.
Good morning, Alok sir. Good morning, Kanika ji.
Morning, everyone. Morning, sir.
Yeah. I was very pleased to hear FM say in one of her talks with us that profit is no longer a negative word. I don't remember the precise term she used, but she said profit is not a negative word anymore. So there is real business terms in the practical sense and not just something which is academic, which is being considered. And that's what we need. Rajiv ji, this is on lines of what you said about Deng Xiaoping. Yeah.
Yeah.
Rajiv,
Haji.
I will join back at 12 o'clock for our session.
Thank you.
Okay. See you. Bye.
See you.
Bye, Alok. Bye.
Bye.
But we can log out after the inaugural and then log in again at 12. Can we do that, Sharma ji?
आप क्यों जाओगे? I need you.
Sir,
You can give
especially for the reason कि कभी-कभी काम भी करना पड़ता है.
ये भी काम है, ये तो देश का काम है.
बिल्कुल सर, बिल्कुल काम है.
सबके लिए है. This is the moment really so much.
फटाफट.
But today is a good day with the Zomato IPO getting oversubscribed. There's clearly a new direction to the economy that new kinds of ventures will find funding easily.
He is 10 times both Oberoi and Taj.
Yeah.
After a lifetime of great work by both those companies in hospitality, he is more than 10 times. No, he's 10 times.
Yeah.
Ballpark 10 times. Market cap.
So India is changing and business is changing.
Business is changing. Will stock exchange boom be a new normal? There are very interesting thoughts on that. Is something like that sustainable in the long term? It is really at such a high number. In the ground reality, even for companies that have got cash losses, if that sort of profit market cap is there, it is going to be very interesting. But I read an article that perhaps the highest rise, more than normal stock exchange principal companies, more than, of course, much more than gold, much more than interest in even corporate bonds, is the Bitcoin that's had the highest rise in the last few years. It is mind-boggling, the rise there, which is again what you said. It is linked to technology and digital economy, and what is.
And one doesn't know the intrinsic worth of it. It's just a notional value.
Yes, but it is sustaining, and somebody like Elon Musk invests in it. I will not, but maybe that's why I don't make that sort of money.
Yeah,
I don't have the heart to take that chance. Yeah. All right.
In fact, sir, we should consider having some sort of an event on just explaining to our members about Bitcoin and all of this, because this is all something which people are very interested in.
I just hope it doesn't lead to too much of subscription to that, because you'll be fanning speculation with it. How do you caution your members that, you know, there's a lot of money going out for those things, cryptocurrency.
No, I appreciate. So all the more reason why we need to educate them.
May I just take a second? I think we are being recorded and are live with the participants. Is that true?
Yes.
So we just need to be conscious of that. Of course, we are happy to share thoughts with participants while they very kindly wait. Yes. President Saab, if you feel at some point of time we should make a slow beginning, then we can do something, or maybe put up something, Sharma ji, if you have, because then there are other things to follow, and other guests in next sessions.
I think, Dr. Sharma, you could talk about some of the recent, economic trends in terms of, we have made some surveys, and you have made, we are releasing the GSP and the, GPS data and the QET. What are they indicating in the past 2-3 months? that could be of interest to the participants, because you have just 2 days back released the GPS index for June, right? Which was quite delayed this time because of the delay. No, this was released on the 8th of July, sorry. But this was released on 8th of July because this time there was some delay in release of the GST numbers, right? But where do the trends point? What is your take on this? Could you just give us some view? You are muted, Dr. Sharma. You have to unmute.
Yes, sir. Interesting. Because of some base effect, because we were in very, very low trajectory last year, like IIP numbers were in minus 60% in the months of April and May. But now these numbers are increasing on the basis of low base effect. So on an average, I believe there is very, very meager growth on the basis of this low base effect. And if we average out the last year and current year, then the growth becomes very, very meager. Actually, if we were down last year 50-60% and now this year we are growing at 50-60%, then the growth is near somewhere between 0 to 1%. So on the base of 18-19, I believe there is hardly any growth. But on the base effect, low base effect, we are going in the much higher trajectory. But on sequential basis, out of the 10 most prominent parameters, we are growing in 6 or 7 month after month. So on an average, economy though moving in the right direction, but still we have to go a long way to move upward on the base of 18-19.
So I think what the data indicates to us is that, as Dr. Sharma rightly said, the trend is positive, but it is not a trend which is, universal. It is not a trend which one can really feel happy about, that, okay, there was a dip last year, there was a problem last year, and this year we are overcoming all the negatives that we had last year. So we are overall, in the general sense, overcoming many of the negatives, but we have not overcome all the negatives in the way that we would have wanted. Probably the second wave of the pandemic has been a major reason for that. But I think we need to now be much more proactive in guiding and steering the economy towards a direction which has to be now unequivocally a positive direction on all possible indicators. Otherwise, it would be very difficult considering the setbacks that we have already suffered, right? So you could continue, sorry for my interruption.
Yes, economy was in very good shape in the months of January and February. But after the second wave, now economy is again impacted. Though the growth is very high on the April and May and June numbers because of significantly low base. But going forward, we have to see if the growth is sustainable in the coming months also, on the low base also, because now the low base will be vanishing month after month. So that will become normal in the months of August and September. So if we are growing in the higher trajectory in the months of September and October, or even in August, then that will be a good sign that we are recovering a lot from the pandemic impact of the last year. But if the growth becomes around 0 to 5%, then that there will not be any much recovery, because that will be only on the basis of the low base effect. So going forward, I believe there is a need to push the trajectory with more and more reforms, particularly for the ease of doing business, as we are today discussing the major points, because ease of doing business must happen at the ground level, majorly for the small and micro businesses, so that they are able to rejuvenate from the ground level. Because large enterprises are very much connected with the global markets, and global demand is now re-emerging. So large conglomerates are in a good position as compared with the MSMEs. MSMEs are not that much connected with the global marketplace. So they have to sell their products in the domestic market, and domestic demand is not happening much. So impact is more on the SMEs.
But tell me, Dr. Sharma, we feel that the domestic demand is weak. Even then, we are seeing a hike in the wholesale price index. The WPI is showing 12%. Now, how does that compare to the consumer price index, and then how does it correlate with the overall direction of the economy?
Yes, sir. That is also a majorly there is not except some commodities. There is not much price rise in the system because that is also majorly because of the low base effect. Out of the I believe 695 items, around 400 items are below the 5% WPI inflation. Around 400 items are below 5% in the WPI, and only 8-10 items are driving the whole WPI scenario, like the fuel prices and other some commodities, some vegetables like apples. These are in the much higher price rise.
Could you give us the list of those 8 or 10 commodities which are driving this increase in WPI? I think that would be very interesting, and it would be an interesting point for today's discussion.
Yes, yes, sir. We were conducting an analysis that how the WPI inflation trajectory is going up, but only 8 or 10 items are more than 50% inflation. But for more than 400 items are less than 5% inflation. So majorly price rise is driven by a few commodities, which are related to majorly energy and power related products.
Energy and power. What about plastic, metals?
Yes, these are also, but these are more than 20% trajectory. But majorly the power and crude, petroleum products, diesel, ATF, all these items are in the more than 70% or 80% trajectory of the inflation.
Excellent. Sanjay ji.
And similarly,
I'll just intervene. Mr. Amitabh Kanji is still busy with the CAPSEC.
Right.
So I just spoke to his PS, Mr. Senthil. So he says he is already ready. They are all logged in and ready. But the moment he comes, he will start speaking. He'll be speaking for 15 minutes, followed by a question answer session. So I think with the permission of the President and Chair, Mr. Anil Chopra, can we start the program, sir?
Yes, we should start. Sanjay ji, aap bolenge pehle, should I speak?
Aap boliye, sir. Aap bataiye. Aap boliye.
You are perfectly. I'll be very happy to listen.
I think Sanjay ji, our President, can speak just before Amitabh Kanji arrives.
Oh, yeah, I'll have to still speak. Being the chief guest, I'll have to speak before.
Yes, sir. Yes, sir.
You kindly go on.
Okay. Respected dignitaries from the government and industry, Sanjay Agarwal ji, President, PhD, Saket Dalmia ji, Vice President, PhD, ladies and gentlemen, a very good morning to all of you. Much has been done by the government during this pandemic to give relief from hardship and to stimulate the economy. And there is much which is still to be done and will be done. In this backdrop, the agenda of today's webinar is to discuss the current economic scenario and measures that India needs to revitalize and stimulate the economic growth while providing relief from hardship. Ease of business must accompany these measures in an effective manner in the field. At this juncture, the economy needs further bold measures, industry needs support, and consumer needs supportive measures to revive the consumer and industrial confidence, boost the investment, and to trigger demand growth. Perceptions are always important, and we understand the relevance of the same. We need positive perceptions, and there is reason to think accordingly. Investment in human and physical capital is required. Focus is needed on investments, particularly in 5 areas at the core of sustainable and inclusive growth, namely health, education, roads, electricity, water, and sanitation. The right balance has to be found between sustainable development, between financing development on the one hand, and safeguarding debt sustainability on the other, between long-term objectives and objectives of pressing immediate needs. We need to also keep in view nature. Boosting nature-based solutions and infrastructure, such as restoration for hilly, coastal, forests, are all extremely important, and we have seen the need for the same in the current pandemic. Some focus areas for managing the pandemic and to foster growth are strengthen capacity to collect tax and increase tax to GDP ratio. Government needs revenue. If we need stimulus, if we need support, the people also need support, then revenue is also needed. However, we must enhance efficiency in government expenditure. It is a well-known fact globally that there is a need for efficiencies in most countries when it comes to expenditure. That is a tangible resource available to us. We need fiscal stimulus. GST cuts and clarity in GST will boost demand. This is not a GST seminar, but rationalization of rates is needed. Clarity is needed. There is much to be done, and PhD has been giving its suggestions from time to time in this direction. Income tax also, we have global rates now, such as for companies, but we need rationalization and simplification. We need provisions that can be administered and complied with in a just and fair, simple manner. We need tax on real income, not notional income. Stamp duty concessions. Market value is often not the same as stamp duty. Otherwise, too, it is appreciated globally that reduction in stamp duty rates will give an impetus to construction, to real estate, and it would be well deserved. We need to maximize investment with social service as an objective and with the need of the moment as an objective. So healthcare. We must, along with healthcare, invest in real education. Let us, each one of us, publicize the benefit of vaccination, of complying with safety norms. Cure is not an answer for prevention. We cannot afford these surges. We must all act responsibly. It is not only for the government to do so, but yes, the government too can help. There are new age normals, work from home, technology, digitization, increasing relevance of e-commerce, startups, and there are benefits of the same. At the end of the day, all this leads to economic momentum, it leads to savings and efficiencies, and it leads to environmental control. If someone is able to work from home and his car is not on the road, then that is welcome. Of course, he can always do more work at home if he chooses to, because he saves driving time and perhaps more time for his family and his quality of life. The pandemic has shown the link. Pollution, our health, and our need for healthcare. The pollution has affected the health of our people. And though our fatality rates are low, there has been a lot of sickness which perhaps was more serious and is stated to be more serious because of people who have been adversely affected by pollution, with the immunity and resistance breaking down. So environmental control is an investment in the right direction. It is an investment in our future. It is an investment in our people. And it is also an investment in the need of the moment, which is to meet the mischief and trouble of viruses such as this. Real estate industry plays a pivotal role in the economy. Directly or indirectly, it supports 250 industries. It is one of the hardest hit. Real estate and construction give employment to millions. Again, have a cascading and ripple effect. We need to focus and prioritize on getting real estate back into momentum. Infrastructure is agreed by all to be a priority and key sector for upfront investing today so as to attain the benefits to follow. Here too, the buzzword now is prioritize investment in infrastructure, which is sustainable and green infrastructure, or infrastructure which has social objectives such as medical and education, so that the physical, human, and economic needs of our people are met. Providing roads, providing water, providing sanitation, renewable energy, electronic vehicles. These are all sectors which need focus and support by all concerned. Exports. We somehow continue to export reasonably and substantially, but much more can be done. We have a cost advantage. We have a people advantage. We have skill sets. We have highly driven, talented people. We have people who are entrepreneurs in small, medium sector and who are willing to stake their all. There is a new global supply chain being created by the disruptions. We must move in. We must be an alternative to China. We must be second to none. But we must have consistent policies. We must have consistent support. We must receive what is our due. And the support that is needed is across the board, including in ease of business, credits, early payment or timely payment of government dues, development of technology and skills. There is much that can be done here. It is no one's case that there is going to be deglobalization, however much countries may look inwards. Technology and the need of efficiencies and the good practices of business and its advantages will continue to make people go to where they get best advantage. Thus, global resources will be used globally. Whoever is efficient, he will get the business. Let us get the business. Let us create what is needed to do so. One of the aspects needed is liquidity. Small, medium business, other business, liquidity is the need of the moment. Much has been done. On all fronts, much has been done. But there is more to do. We need to do things in the field, in the real time. any number of small, medium business houses, self-employed houses, others need finance. Now, if again, it is what happens in the field that is relevant. Financial institutions suited to different sectors have to be created. Models have to be created. Government is supporting. But further guidelines and monitoring of what the government said, is it being done finally? Is the bank giving credit as per what the government has said? You cannot just enjoy a lower reserve ratio as per what RBI has said or government has said, and you cannot just take guarantee or cross guarantee from institutional or government sources, but still restrict what you give to the businessman. The credit is for the businessman. The businessman makes livelihood. He makes the economy go round. And it is the MSME who is the largest player, largest in number of people engaged, and a large proportion of the economy, both in manufacturing and in services. Finance is needed, sir. Monitoring is needed. Implementation in the field is needed. Accountability is needed. We will also have to create skill sets. We will have to create the trickle down and the user of technology, digitalization, new age products, so that our people get used to taking advantage of the same and do better business in the best interest of all. We do not have the resources or as deep pockets as, say, a UK, US, and Japan, who have already pumped in trillions. Our government has pumped in much. But yes, balance is always a key word. I again quote, which I had said once earlier, that our FM can do no better than say, and I quote from her what she said towards the budget. I have to be conscious that if I don't spend now, then the stimulus is meaningless. If I don't spend now, the revival is going to get deferred, and we can't afford that. This was before the acute second surge. There are large number of self-employed, large number of workers, large number of businesses that are already on the verge of closure. Some may have closed and more. So it is a tricky balance, but this balance has to be found. We also cannot go by classic rules of deficits and debt financing. If ever there was a time to open our purse strings and reserves and to invest and spend for our people, it is now. There are revenue shortages, but disinvestment and monetization of assets is one of the answers. The government is aware of it. Major steps are being taken. We welcome the same. Extraordinary situations such as the pandemic and its adverse effects need innovative thinking and innovative out-of-the-box action. That is being done, and I am sure will further be done. All of us, public and private sector, academic sector, must work together. Webinars such as this are to share thoughts, to get the benefit of thought leaders, business leaders, people in the real practical field as to what needs to be done in partnership. We are one people to work together towards sustainable solutions and growth. Any such sustainable solution and growth today, I repeat, and the government is conscious of this and taking steps in that direction, has to include bottom up also, and ways to catch the fish, ways for efficiencies, ways to meet tomorrow along with meeting today. So digitization, imparting skill sets, technology, new age efficiencies, this needs to be done. While we work hard and assiduously, in fact, to meet the situation, we seek ease of business. That is the governance which we believe our government desires to give us. And that is what we need. All policies are only as good as the action they are translated into. They are as good as what happens in the field. We have a whole technical session on ease of business. We have moved up the ease of business chain. We are now 63rd in the world, but we are one of the top handful of economies in the world. Why can't we be, in ease of business, one of the best economies in the world? We can. And I'm hoping we will. With an ease of business, there are some segments where our numbers are still much lower than our overall ranking. This includes starting a business, enforcing contracts, solvency resolutions, paying tax, trading across borders. Step by step, we have to improve, and if we can do it at a fast pace, even better. We must become a preferred destination. Make in India includes an invitation to India, a preferred destination. We should become the world's producer of goods and services. We should attract investment. We have a session on this. We have the Additional Secretary Commerce talking to us about this later in the day. Employment. Common man. It is the needy who needs the most, and we are each one of us responsible to him. Anything we talk about must take into account enhancing employment. Many have lost their jobs. Many have lost their businesses. We will be coming, and in fact, we may do a paper which is employment centric. How do we enhance employment? Yes, there will be trickle-down effect, true. But in addition to trickle-down effect, what should our priority and focus area be to enhance employment? To give self-respect to the man willing to work 24 hours to make a meager living. We must do that. It is only the government in a situation such as this, history has taught us, that has the resources to create requisite stimulus and packages to meet the needs of the moment. This happened in the Great Depression. This happened in the subprime crisis in 2008, and it similarly happened in other such situations. US is almost back on its feet again. But then they've been able to spend trillion. All right, today we are not US economically.
Ladies and gentlemen, Shri Amitabh Kantji has already joined, the Chief Executive Officer of the Niti Aayog. Welcome, Amitabh Ji. Thank you. Thank you for joining.
Thank you.
Good morning, sir. It's a privilege to have you join us. And we know that how busy you are. But despite that, having found time for us, we are really privileged. Thank you so much.
Thanks. Thank you. Can I go ahead and speak?
Please.
So let me first thank the PhD Chamber of Commerce for inviting me to deliver an address at this very eminent gathering. In shaping a post-COVID reality, there is no way out for India but growth. We have an opportunity to usher in change that will see our society transformed within a generation. The pandemic has shown us more than ever the importance of partnerships in pursuing national and global goals. It is with the same spirit that we must continue working to script India's economic recovery and then growth story. Despite the impact of pandemic, India's macroeconomic fundamentals remain strong. We have seen economies in East and Southeast Asia transform themselves within one generation through ushering in reforms and policies to promote private sector-led growth and investment. South Korea grew at an average rate of about 9.6% in the 3 decades between 1960 and 1990. 9.6% in 3 decades. China between 1980 and 210 grew at the rate of 10%. And both these countries, which were extremely poor, lifted vast segments of their population above the poverty line. While India has witnessed a substantial transformation since the 90s, our average growth rate for the past 30 years has been 6.5%. Investment rates as a percentage of GDP average close to 33% in South Korea and 37% in China in the corresponding periods. In comparison, India's average investment rate has been a shade below 30% in the 3 decades since 1990. Raising investment levels will be crucial to India's growth story going ahead as they raise productivity and efficiency. Innovation, rising competitiveness, and generating employment are the key instruments of growth that are unlocked through higher investments, especially through the private sector. There were definite signs of revival and acceleration seen in the economy, in the Indian economy at the outset of the second wave of the pandemic. Manufacturing PMI has remained in the expansionary zone. GST collections have been robust and exports are growing at a healthy pace. However, with localized lockdowns in a staggered manner between April and May and a staggered unlock process beginning in June, there was a deceleration in growth. However, projections for GDP growth for the current financial year are implying a real growth rate between 9.5% and 12.5% as per various agencies. This in turn implies that the shape of recovery taking place is likely to be a V-shaped one. Manufacturing PMI, a heavily watched indicator, remained in the positive expansionary zone for 10 months, exhibiting a slight contraction actually in June 2021. However, with active cases continuing to fall and the pace of vaccination gathering steam, we should see manufacturing activity bounce back in the coming months. GST collections also remained above the rupees 1 lakh crore per month for 8 months in a row till June 21, when they fell slightly to rupees 92,849 crores. At this point, it is pertinent to note that GST figures released in June 2021 reflect collections in May. The number of way-bills generated in May have risen. May stood at close to about 4 crores compared to 5.88 crores in April, which reflects the lower collections as the data shows. However, in June, the number of e-way bills generated have risen sharply, indicating that tax collection are likely to be robust in July 2021 onwards. Retail inflation, which many expected to rise further, has stagnated in June 2021, coming in at 6.26% as compared to 6.3% in May 21. This indicates that the momentum being gained by inflation has slowed, which indicates that inflationary pressures may continue to ease in the coming months. Core inflation eased from 6.4 to 6.2%, reflecting lower inflationary pressures and expectations. Inflation in household items, personal care and recreation has seen a moderation, reflecting the further easing of supply chains in the nation. Food inflation remained elevated on account of higher prices of oilseeds and edible oils. Global price rises are being translated to India, as India imports nearly 70% of its oil demand. In the monsoon, however, that will have a significant bearing on food inflation outlook going ahead. While the monsoon was slightly delayed, sowing has picked up pace now. A good monsoon will see a substantial dampening of inflationary pressures in the coming months. Important thing is that exports have remained robust, and between exports, monthly exports have remained over 30 billion for the past 3 months of the calendar year. Exports have shown considerable growth even when compared to the level of 2019. In addition to export, foreign direct investment inflows have been growing at a robust pace. Between April 20 to March 21, FDI equity inflows touched 59 billion, an increase of 19% over levels seen between April 2019 and March 2020. The increase in FDI in a year of severe economic disruptions is a reflective of the sustained global confidence in India's economic growth story. The strong external environment bodes well for India's goals of an Atmanirbhar Bharat and integrating ourselves into global value chains. Exports will be the engine through which we must drive growth in the near term. Globally, demand is rising and the world is full of liquidity. Our exports between January and May have totaled 152 billion, significantly higher than any other similar period. Reforms for easing regulatory burden, availability of credit, and lowering the cost of logistics will be crucial to driving exports. Over the past few years, India has seen both economic and governance reforms. The scale of transformation undertaken has been unprecedented. Easing the policy and regulatory environment has been the goal of these economic and governance reforms. The economic and governance reforms undertaken in India over the past few years address critical bottlenecks that have held back India's growth story and will usher in a new era of growth and prosperity. Over the past few years, India has seen both economic and governance reforms. So, the scale of transformation undertaken has been quite unprecedented. The GST, insolvency, bankruptcy, real estate, direct taxation, coal mining, labor laws, agriculture reforms. These are all bold measures in some of the key areas in which reforms have been announced. The government has already taken a number of steps to boost the economy, such as announcing reforms in key economic sectors, expanding capital expenditure, and easing FDI regulations. We need to further ease the compliance burden, eliminate redundancies and duplications in approval, and single window clearances for projects are areas where we are actively engaged. Creating a state-of-the-art digital infrastructure is also high on the government's agenda under the Digital India mission. Villages are being provided with 100 Mbps connectivity. Public Wi-Fi networks are being set up. Our digital payments infrastructure is a great example. Launched in 2016 through the UPI, we created an underlying layer which enabled interbank transactions in real time. The platform was then opened up to the private sector, which built their own apps and onboarded users. In terms of volumes, UPI has already surpassed Amex and is expected to surpass Visa and MasterCard in the coming years as well. The government recognizes its role as an enabler in allowing the engine of growth and employment in the economy, which is the private sector. And all of you in the private sector must thrive and drive India's socio-economic transformation. The production-linked incentive that has been announced is one of its kind strategy that rewards performance and provides direct revenue-based incentive. The total budgetary outlay for PLI schemes stands at rupees 1.96 lakh crores or 26 billion. This is the first time we have come out with such a major incentive scheme. On average, 5% of the production value is provided as an incentive. This implies that the minimum production in the country as a result of the PLI schemes stands to be around 520 billion in the next 5 years. Infrastructure will power growth through the National Infrastructure Pipeline, which envisages rupees 100 lakh crore worth of investments, and 21% of the investment will come from the private sector. Investment in infrastructure will lead to lower cost of logistics, further improving the competitiveness of our firms. Similarly, the asset monetization pipeline will envisages a lot of brownfield assets being put out in the market, for which private sector can structure the projects on InvITs and REITs. Ladies and gentlemen, the Parliament has passed an act to establish the National Bank for Financing Infrastructure and Development, NBFID, as the principal development financial institution, DFI for infrastructure financing, including the development of bond and derivative market. The financial objective of the institution is to lend or invest directly or indirectly and seek to attract investment from private sector investors and institutional investors in infrastructure projects located in India. In 2021 alone, ladies and gentlemen, we are seeing a very major entrepreneurial ecosystem, and technology has permeated our lives like never before. A culture of innovation and entrepreneurship to drive technology adoption is now eminent in India. We are one of the most vibrant startup ecosystem in the world, and we are the second largest startup ecosystem. We have over 50,000 startups that have come up within the past few years. In 2021 alone, we have seen over 30 new unicorns in India. And globally, we now have the third largest number of unicorns. We have seen the Zomato IPO being oversubscribed by over 35x. And this shows that Indians will now be supporting and financing and raising Atmanirbhar capital for the growth of our startups. Ladies and gentlemen, over the past decades, India has always played catch up with the world in terms of technologies and industries. Consequently, rather than capitalizing on sunrise sectors of growth, we used to get into sunset industries, further dragging our competitiveness down. Now we are focusing on sunrise areas of growth, electric vehicles, battery storage. The future of mobility will be clean, connected, and shared. And we are aiming to be in the forefront of this revolution. Green hydrogen is another sunrise area. There's also immense potential in the domains such as artificial intelligence. India is a data-rich country, and therefore, with increasing data intelligence, artificial intelligence, machine learning, data analytics, blockchain, cybersecurity, cloud computing, and genomics with their applications all across India in both commercial and social aspects will play a key role. Ladies and gentlemen, it is only through partnership that we'll realize the ambitious goals we have set out, be they on economic growth, sustainable development, or climate change. Government, business, and civil society must work together to achieve the shared vision of a new India. Physical infrastructure is a natural avenue for PPP, and India has a long history of such projects, and we'll continue to promote them. PPP in social infrastructure is another avenue. Now more than ever, the importance of social infrastructure such as healthcare facilities has come to the fore. Unlocking investments in the social sector will be crucial to India's resilience and adaptability. Partnership of the private sector and unlocking the potential of innovative financing mechanisms such as asset monetization will provide an impetus to green finance, and these are areas which will drive India's growth. Ladies and gentlemen, India is well placed to take advantage of the ongoing realignment in global value chains through a considerable easing in the policy and regulatory environment. We have also made significant structural and governance reforms in the social sector, powering growth in India's human capital. These moves have ensured India's status as one of the most attractive destinations for both domestic and foreign direct investment. Ladies and gentlemen, the world order is changing and India is ready to absorb capital from all over the world. Thank you very much, ladies and gentlemen.
Thank you, Amitabh ji. Thank you so much for your very inspiring words. I'll request you to spare some more time because I will invite the president on behalf of the industry to give his presidential remarks. We have known that the current government's USP has been accountability, transparency, and efficiency. And in the words of the Honorable Prime Minister, when the Niti Aayog released the publication, The New India at 75, which was the strategy for the new India, it laid down the roadmap, and where we know that you were the architect of that strategy. In spite of that, there has been many more initiatives which were taken personally by you, sir, including the Branding India, an incredible story. You have the Make in India, the Startup India, the Incredible India, and God's Own Country. So thank you so much for giving those inspirational and motivational remarks. And now I request our President, Sri Sanjay Agarwal ji, to kindly give his presidential remarks. Thank you.
So much, Saurabh ji. I think we will not detain Mr. Amitabh Kant for too long. We know that he has an extremely busy schedule. And best part is that from what he has spoken, it tells us that what is the level of consciousness to the economic issues facing the country at the very top, to each individual micro issue even. What Mr. Amitabh Kant has talked about today is a total bird's eye view, a complete 360-degree picture of where the economy is, and not only where the economy is, what all the government is doing to actually make sure that we as a nation are moving in the right direction. The pandemic was something which was in nobody's control, but despite that, the number of steps that have been taken is actually the plethora of steps is totally amazing, and we must appreciate that. The role of Niti Aayog in making all these policies work to have these implemented is again something that we all need to be, very, very appreciative about. The sort of human service that Niti Aayog has given, especially on Make India and Atmanirbhar Bharat. I think you have been the flag bearers of this scheme, despite a lot of resistance we see from some bureaucratic quarters coming in many instances. But I think Niti Aayog has been at the forefront to make sure that such roadblocks do not impede the progress. The PLI scheme, nearly 2 lakh crores that is being spent, every rupee is going to multiply the returns for the economy in a very long-term basis. Is again something that we all as a nation are very proud of, sir. And I think your stress again on economical and environmental aspects, especially the green hydrogen initiative. PhD Chamber is also very proud to be associated with the climate summits that we are hosting in September, sir, in which hopefully you will also be attending. And we hope to launch the International Hydrogen Alliance on the lines of the International Solar Alliance also. Prime Minister of Norway probably would also be attending, and the Prime Minister might attend. Very grateful. I would not like to detain you. I think you have yourself given a total 360-degree view to us, and we are very, very grateful for your having shared your views with us. Thank you so much. Thank you.
Sir, before you leave, sir.
One second,
Yes.
Saurabh ji. Amitabh Kanji, this is Anil Chopra, Chair of the Economic Affairs Committee. Sir, we will send you a note on what the chamber said before you came. We are fully conscious of your time and its value and your need to be in many places. We will send you our note. What we feel extremely gratified about, and you will be delighted about, is the thoughts of the chamber. What we said in our presentation today is very similar to all the points being said by you. So that will make you very happy, sir. But certainly it makes us extremely happy. We look forward to continuing to work with you, sharing thoughts and sharing suggestions.
Thank you. Thank you so much.
Appreciate your being with us, sir. Deeply appreciated. Yeah.
So would like to request Rajiv Talwarji to give kindly give his observation quickly, sir, before we.
I just want to
request Saket Dalmia ji to come for the vote of thanks.
I just want to tell the entire gathering that you must have heard Amitabh, and you know for a fact that no one could have replaced him. The kind of vision that he's given. In fact, I'm a little perplexed. I have only one question to ask him: that how was he speaking so fluently when it looked like his speech was prepared for an international audience? It had ladies and gentlemen so many times. It had all the entire facts and figures, and yet it included the latest thing about Zomato also. So I'm very grateful to him for his presence. You know for a fact that, as Sanjay has said, the president, that he gave a 360-degree view of the economy on what you need to expect in the future and what you need to do in the future. I think we have no greater supporter of growth in India, and for the chamber and the industries which are represented by the chamber than Mr. Amitabh Kant. In fact, it sounded like a prime ministerial speech which was cutting across every sector and so fluently done. Very, very grateful to him. I don't think we have any questions to ask. We can only take directions from there. Thank you so much for being here with us, Amitabh. Thank you.
Thank you, sir. Thank you. Thank you so much. May I now request our Vice President, Shri Saket Dalmia ji, the youngest leadership, to kindly give the vote of thanks.
I think sir has left the meeting for another time. I think he's not there.
No, he must be there in the room.
No, he's there.
He must be there in the room, Saket. Please do complete your vote of thanks.
So I think, thank you first of all, everybody for being here, including Mr. Amitabh Kanji. And I think one of the most important takeaways is that the government is very, very well aware of the ground reality, and the Niti Aayog, as mentioned earlier, that they are very well aware of the pain points of the private sector as well as the intentions of the government to get it done. I think the biggest challenge, sir, Amitabh Kanji, is, that we are primarily into the small and medium people are the members of our chamber. And with the sustained or rather the repeated COVID problem which is coming in, is creating a huge environment of uncertainty. So how does the government ensure a sustained environment of demand and investment in such a difficult time? I think this is the key point, sir. If you are able to address that by listening and by sharing the pain points of the private enterprise, especially the small and medium, and being able to give the government some kind of recommendation to signal to the business that, listen, we are there. I know that the government is doing a whole lot of that, but a little bit more and a repeated action on that front is, I think, the key to make sure that a businessman does not feel insecure that what happens if the COVID comes again? Should I go and spend? Should I go and invest? And should I still believe that the short term and the medium term will not really ruin my business, sir? That is one of the most important takeaways, sir, what I would like to share on behalf of the chamber. And thank you once again, sir, for always guiding us and showing us the way. Jai Hind, sir.
Friends, we will now move on to the first technical session, which is on ease of business.
May I now request Dr. S.P. Sharma to take the program forward? I had to intervene because there was a slight modification. Suddenly, Amitabh ji came in.
Thank you, SG Saab. As mentioned by our chairman, Shri Anil Kumar Chopra ji, that our first technical session is on ease of doing business, because this is very, very important aspect to move forward to become sustainable in the growth trajectory and to achieve the size of 5 trillion in the next 5-6 years. So I would request our chairman, Shri Anil Kumar Chopra ji, to moderate the session. And we have eminent personalities like Shri Deepak Bagla ji, Managing Director and CEO, Invest India, Dr. Mahesh Gupta, our former president, Shri Sanjay Chadha ji, Additional Secretary, Ministry of Commerce and Industry. He will speak on cross-border trade and investments. So I request our chairman, Shri Anil Kumar Chopra ji, to moderate the session. Thank you, sir.
Sharma ji, could you confirm our very respected speakers, Deepak
Hi, sir.
Bhagwati and Sanjay Chadha there?
Why?
I don't know. Can you see?
I can't see their name in the panelists, Sharma ji.
Sir, we are in touch with his office. He is joining shortly.
This is Deepak Bagla ji. Right. And Sanjay Chadha ji?
Yeah.
Would you like to call me, Sharma
Dr.
ji?
Sharma, you are muted.
Introductory theme presentation about the ease of doing business. You can provide your thought process, your suggestions for the ease of doing business in the next 2-3 minutes. So Deepak Bagla ji will be joining shortly.
Is all right. And is Sanjay Chadha ji here, Sharma ji? I have not got your.
No, he will join. He will join in next 15-20 minutes, sir. His speech is at 11:30.
All right. Okay. Mr. Saket Dalmia.
I am here, Anilji.
Saket ji, we wanted to request you to make some observations on ease
So
of...
Mr. Deepak Bagla has already joined, but he's not coming on the video. So we'll
just
Dr.
wait.
Sharma, if you can kindly WhatsApp him, or I'll WhatsApp him the link once again, so that he can join from his mobile.
You know, like Alok was joining from the car. I mean, anyone can join on the telephone, a smart telephone. And Deepak will certainly have the best.
Certainly.
Sir, he is facing some technical problem to open his video. So he's trying to open the video shortly.
Sharma ji, then we can ask him to come through the telephone.
Yes, sir. He is joining through telephone only.
Okay.
That's why he is facing this problem.
Okay. Okay. So let's start with Saket. Eminent words from a very eminent person.
First of all, sir, so it's a pleasure to have all the eminent...
Can I just quickly introduce Saket ji? I think if you permit me, then I'll just do the honors, please. Just give me a moment. So Saket Dalmia ji is our Vice President of PhD Chamber. He is the Managing Director of PG Industry. Marble City has global facade products with cutting-edge technology. What is extremely pleasing to note, that they have been felicitated as one of the 100 fastest growing export houses of India. He has obtained his degree in business and finance from McDonough School of Business, Georgetown University, USA, and started his business journey on his return. An extremely bright, energetic young man from whom there are great expectations from all of us in the chamber and in the business world. Mr. Saket Dalmia, please, sharing his practical thoughts on ease of business, what is needed, what are the difficulties he's facing, and what would make him happy.
Thank you, Chopra Saab. Really a pleasure to have so many past presidents and so many eminent members of PhD joining this platform. As Chopra Saab said that on the ground reality, I wanted to reiterate what I just mentioned with Amitabh Kamji, is that when I look towards my business and to the business of my peers, the burning question which comes in front of us is that how do we switch our mind to a world which works in batch processes or installments as opposed to looking at a 12-month period in continuity. When we look at the first pandemic of COVID attack, and subsequently we saw a total shutdown of business. The second wave of COVID saw a different strategy by the government, by the business, and tormented by personal loss. Now we live in an age where every morning we read the newspaper that the third wave is coming. We are not vaccinated. And the people who are vaccinated are also unsure. With this kind of a background, we still see several, I think Deepak ji has joined. Namaskar, Deepak Saab. Sir, I insisted that...
Hi, Saket. My apologies, technology let us down this time, but I've been there right through and I heard your closing remarks.
Okay, fantastic, sir.
So we are grateful to see you, sir. Very, very happy to see you join us after some time because earlier, we have always had your support all through. And very happy to see you again now in our program today. Thank you.
Thank you, Sanjay ji. It's always a pleasure. And my guide is always with you, Mr. Talwar, so there is no other reason to be that. Yeah. So I was always prompt. I could never be late, nor was I today. But yes, please tell me. Whatever you want us to do, we'll take it forward.
Sure, sir.
So, sir, the baton was handed to me. Before I hand the baton back to my seniors, I was just super excited to share with you, sir, that when I saw that you are also an alumni of Georgetown, so I said that I have to mention this on the public platform so that you don't forget me. And I keep on grabbing opportunities to get you back to PhD's platform again and again, sir.
Always a pleasure, Sanjay.
I heard you before, and you're such an amazing speaker, sir, and such an amazing time in history you're facing, sir, that you are heading Invest India. And with Amitabh Kanji mentioning that, there is so much of money pouring into the country. So we have global money coming into the country, into great ideas and great businesses. But the flip side is how do we make the money which is already in the country be invested back into business? I think that is the biggest challenge, sir, because we all know that as we scale up, everybody is coming for a market share for India. We understand that. And obviously, as things ease up more and more, sir, and as you guys make the environment much more friendlier, more money will come in. But what happens to the enterprise, which is already in a very small, medium and micro states, which has a great possibility to, exist and change India's future? They see a lot of uncertainty, sir, because everything is not based on technology. Some businesses, technology enables. They are very good at what they do. But in these times of uncertainty, what can the government do, with the partnership of the businessmen to take it forward? Those are a few of my thoughts. Back to Saurabh-ji, I think I don't want to break the structure of our meeting today. So, SG sir, please follow this meeting through in the direction it is supposed to go. Chopra Saab, Saurabh-ji.
Saurabh-ji, I'll continue from there. Yes. Deepak Bagla-ji, welcome. It's indeed a pleasure to have you with us. Friends, may I please introduce him, though he needs no introduction. Shri Deepak Bagla has a very distinguished professional career of over 3 decades with World Bank, Citibank, and private equity, having responsibilities across Europe, Africa, and Asia. He is currently the Managing Director and CEO of Invest India, the National Investment Promotion and Facilitation Agency promoted by the government. Invest India is also the execution agency for Startup India and the Prime Minister's Science and Technology Initiative. Please welcome Mr. Deepak Bagla, and may I request him to kindly address us with his thoughts in this technical session on ease of business.
Thank you, Anil. Thank you very much. And Saket, always good to see you. And obviously, being alums, brothers, you will always have good things to say. So thank you very much. I was hearing Mr. Kant speak earlier, and I think he spoke a lot about what the initiatives have happened during the past few months and past few years. It's been a very brutal, especially past 4 or 5 months. I think it was truly brutal. The first time it hit us was livelihood, but this time it touched each one of us to the core of our life. And yet it was, look at it, I was just thinking as to how we look at ourselves as we move beyond this little virus. And if I look at that perspective, if you recollect when we went into this virus, and I'm talking of 2019, it sounds so long ago, 2020, sorry, March, we closed in at a position where we're the largest opportunity in the world, the fastest growing economy in the world, large economy in the world. And as we are looking to move out of this virus, if you look at all statistics, be it the IMF statistic, be it the RBI statistic, and I go by the IMF or World Bank, because I believe that there is a lot of rationality in them. You look at India growing again to be the fastest growing large economy on the planet. Let me just share with you some numbers of what have happened in the past 12 months. So, you know, Anil spoke about it and Saket also spoke about it. March 2021, that means even during this entire pandemic, we got an FDI of about $81.4 billion. And this was an increase since the last time by over 10%. We had 74 last time, we have 81 this time. But I'll tell you why this is important. And let me tell you, this is very, very critical. It's not just that big number. Investment is about trust. Investment is about opportunity. And you put in both these together. And let me tell you, when India increased its stake by over 10%, what was happening globally? We were probably one of the only 2 or 3 countries in the world which had a larger share of their FDI. At a time when global FDI was reducing by close to 35, 36%, at a time when the fall in global FDI was probably more acute than even when the last financial crisis hit us globally in 2009. It was a very trying time, and yet India's share went up. From the top 10 FDI recipients in the world, we went into a position of top 5. Now, why is this happening? Because there is trust and there is this opportunity. Let me give you some more interesting statistics on this FDI, and which is what gives me, Saket, to your point as to how the domestic business is going to get engaged. I had FDI this time from 89 countries. You know, if I'd drawn that Venn diagram 5 years ago, you would have seen just about a handful of, at least one country accounting for 45, 50% of it, and then just a few others of the balance. Today, you got it from 89 countries. It broad bases the base from which you're starting to see this. In fact, I'm seeing FDI coming in from Colombia, from Samoa, from Ukraine, from Kenya. And you know, another interesting factor, when you have this broad basing across the globe where the entire world is showing its faith and trust in you, it's also broad bases the sectors across which it comes. For example, this time we got FDI in 63 different sectors. Very interesting. And Saket, that takes me back to your point. This is where domestic industry engagement gets far broader based where this is concerned. I mean, this time we got a lot of it, even interest coming in agriculture and agriculture related stuff, in agriculture machinery, retail, education, obviously, commercial, office, household equipment. There are new sectors which are emerging, and these new sectors do not only show the opportunity in India, but also show how we have our local businesses coming up in these sectors. And let me tell you the third very interesting leg of this FDI of 81.4. This time you got it across 29 states. If you look at this Venn diagram earlier, you would have had 6 or 7 states taking away the large bulk of this FDI. It shows that there is a broad-based growth which is coming bottom-up, where India is now ready to take on. We had Tripura, we had Jammu and Kashmir, Ladakh, Arunachal. each one of them getting FDI interest. These are very critical elements. These are the foundations which you are creating, on which you will suddenly see a great momentum build up. And you know, when we started Invest India, one of the things when we were asked what we'd like to do, I said, we'd love to see where we have at least 100 billion per annum. That actually is now just going to be happening around the corner. The statistic now should be looking for far more. So please keep this in mind, that this is a very, very critical aspect of how our entire FDI pocket is getting so broad-based. And what it actually goes to show very significantly is how the world is looking at your opportunity and how they are trusting you and how you're seeing new geographic regions and new sectoral regions emerge for it. The other interesting thing, and I tell you, where it is what I see is the biggest movement which has happened in India. It is where the state governments today are taking that initiative on that entire ease of doing business opportunity and also creating opportunities. You know, we have a number of state governments which today have a very potent single window. We have state governments where you just come onto one application and they've deemed approval in 35, 40 days. And we have other states who are moving very fast to take that on. Let me give you a little example of the competitiveness which is happening in states. And it is this competitiveness which is changing the adoption of ease of doing practices at an extremely fast race in India. Uttar Pradesh, they've jumped from number 14 to number 2 in the past few years in UDP, 12 slots. Lakshadweep, from 31 to 15, we've got Mr. Talwar there. They jumped 16 slots in the past few years. Daman and Diu from 23 to 18, Uttarakhand from 9 to, you know, each one of them, Himachal from 17 to 7, each of these positions taking on. And what is happening? It's not just those few big names which are on the top, which continue to stay there. These names are now getting challenged. And the new challengers are coming up with new ideas, are coming up with a journey for the investor, which is far easier, far more attractive, and making it a journey which is far more potent. Mr. Kant spoke briefly about the PLIs. You know, I must tell you, so our team is structured for each of the PLIs. We are managing all the applications and taking care of them. I must tell you, the kind of response we've got in the PLI has been overwhelming. My team had to work overnight for those last 10, 12 days. I mean, though it be the electronics one, though it be the pharmaceutical one, you have each and every global major which has put in their application for this amidst this lockdown. So what has happened in the PLI is that they went product by product, sector by sector to see where we were getting disabled or what was that element of disablement. And that is what was brought into the point where business was no longer going to be looking to see that how it could optimize itself, but how we could make it profitable and how we could create a global manufacturing hub by getting that business in India. And that is exactly what is happening. And the reason why it is happening and why we are seeing such success on the PLI policies, because to my mind, these policies were made with very extensive and intensive stakeholder feedback. Each one of you was involved in providing that feedback and what needs to be done. In fact, we still have a committee which is continuously working on how do we decrease the disablements which are in India and how do we make our business extremely profitable from here. And that is a new perspective which is coming out from the government. It is now making business profitable and making India the hub. And you will start seeing the results. You'll be talking about 26 billion leading to another 520 plus odd billion in the next 5 to 10 years. It's going to be a fairly recent reality. And frankly, I will be not surprised if at some future point when we are all talking, you will see how it has moved up and that number has been met or even surpassed. Now talking about local productivity and local competitiveness. And I'm just running from one point to the other because I know I have to be conscious of the time blank which I have. And I want to talk about MSMEs here. And the reason why I want to talk about MSMEs is because for me, I think the new India is now going to emerge from the small towns and cities of India. And the engine of growth of new India is going to move beyond the 12, 15 metros to these small towns and cities. And they are going to be propelled by my MSMEs. And the strength of my MSMEs, we've all seen even during this lockdown, how they could pivot their business models fast, how they had the frugal innovations where they had the best utilization of resources and their ability to manage constraints. This is the strength of India's MSMEs, and this is the strength which positions them in amongst the best in the world. And this is what you will going to see as we move out of this COVID. And let me give you 4 very quick statistics which have come in. There's a study by Dun and Bradstreet, and I'm all talking of the past 12 months. 82% of the respondents, these are all smart and MSMEs, said that they have digitized their daily operations. They've got a cost reduction of 54% and they've enhanced competitiveness by 51%. Let me take you now to the CRISIL survey. It said that 47% of these micro enterprises have adopted digital channels today. 24 months ago, that was 29%. Let me take you to the next one, HP. HP did a study of SMEs. 73% of the SMEs said they would survive the COVID downturn in India. Let me tell you what was that number in Asia. It was 60%. My MSMEs was 73%, ahead of the Asian SMEs, which said that 60%. And let me tell you another very interesting fact of that. 61% of the SMEs claimed that they would thrive in their operations in the post-COVID world. This is the strength of my MSMEs. And I'm not taking away the fact that it has been a tough time for everyone. It has been a brutal time for everyone across the globe, and rightfully so. There is no playbook to manage such a pandemic. It changes by the day. And yet, because my MSMEs, and remember what I mentioned to you, their biggest strength is managing constraints and frugality. And because between the two of those big elements, they were the ones which continue to do it. And what is the study of Cisco, which says that these MSMEs will be adding another $200 to $250 billion in the next year and 2 years as we go forward by 2024 is what the factor which they said. And I'm going to now close my remarks because, you know, the points about the single window, let me very quickly pick up on those before I close, because we have to speak about ease of doing business. The single window is ready. You were a part of it. We've just done the soft launch. You all tested it. And now we've got virtually a large number, virtually all the state central government departments on it. We're going to be having 11 to 12 states in the initial phase, and then we are going to keep expanding on it. It's going to be a single window. You come onto a platform, it will keep asking you questions and create one single unified application. You fill that in, it goes in right through all the systems within the government and gets you the approvals only on one platform, to a point where you will know where it is, where the position of your application is. And we are also trying, you can upload all your original documents once, so you don't have to run around doing it. That is the first thing which is happening. And this is a path-breaking one, because this is not just a technology play, it's also a mindset play. A mindset where every stakeholder within the government is wanting to make your journey easier. The second part is, obviously today we have project development cells. I have a team in 29 departments of the Government of India. All what their function is to facilitate your journey in India, and also to create ready on the shelf projects which you can come and invest in. We've just started that exercise. The objective on that, increase our capacity to absorb capital. And the third, obviously, Mr. Khan mentioned, there's an empowered group which has been set up of secretaries, where any issues which are of large investments and which are across multiple sectors and multiple ministries just go into that one, and they get into a quick clearance. I'm now going to close, Anil. I know I'm closing on my points, but before I close, I must share with you one point. And this is a very interesting study. You know, the Japan Bank for International Cooperation every year does an internal survey of their own corporates to see where they want to invest in the world. This is the 2021 and this 2020 survey, and this is in the middle of the pandemic. According to the Japanese manufacturing, the most promising country for long-term prospects number 1, India. Number 2, China. Number 3, Vietnam. Number 4, US. Number 5, Indonesia. Number 6, Thailand. And number 7, Mexico. And this was across 18 parameters, which included future growth potential, size of the local market, supply base of assemblers, inexpensive labor, qualified human resources, and obviously the trust in the system that the tomorrow is going to be better than today in this country. Saket, I take it back to what you asked. I think there is no question with all of us that every tomorrow in India is going to be better than today. The interesting point is how fast that is happening today. And let me end by saying that the 2 critical points which helped us through the worst pandemic, and which are the 2 critical pillars which will take you off onto a flying start as you move out of it, is going to be digitization and demography. You are today digitized, connected to all your villages, 640,000 of them. And today we have a democracy which is young, a demography which is young, and which is willing to adapt technology and adopt to technology. Adapt the change and adopt that change and make that change at a much faster momentum. Thank you very much. I hope I have not exceeded my time. Anil, I take it back to you. Thank you. Anil, you are muted. You may want to switch it on.
Yes. Not at all, sir. About time. I wish there were more occasions. There will be. We will come to you. Sir, your energy and passion brush off on all of us. This was there is energy in the air. I mean, when I listen to you all, certainly one gets encouraged to go back to work and to say that tomorrow for our children and grandchildren, there is a very exciting India to live in. The fact that there is a deeper and wider spread of the involvement and the progress, states, small cities, across sectors, this too is heartening. That MSMEs are reporting to you that we will survive, we will thrive. That is heartening too, sir. That we are the #1 priority of Japan, well, that further adds icing to the cake. Single window is up and running. So many changes have been done. More are coming. Men like you are at the helm. Extremely appreciative, sir. The chamber thanks you, and we look forward to continuing to interact with you. So may I also have the privilege of welcoming Mr. Sanjay Chadda, Additional Secretary, Ministry of Commerce, who has just joined us. We will be listening to him a little later in the day on this session. In the meantime, may I please request our very respected Dr. Mahesh Gupta to address us. Mahesh ji is chairman of Kent RO, again a great creator, a thinker, a doer, a Karam Yogi, and a wonderful friend to have. He too is a past president of the chamber. He is part of our think tank. He is involved in art of living. He lives beyond what perhaps technology and digitization can do for us. Not that technology cannot do a lot, but I don't know if there is a way to mix the two, to mix what is spiritual with technology. But what I do know is that men like Steve Jobs came to India, went to our yogis, went and stayed in the temples, and they said that is what charged them up for their life's mission. Ladies and gentlemen, Dr. Mahesh Gupta, please.
Thank you, Anilji, and thank you for warm regards. Nice words. Since you have mentioned about the spiritual aspect, I think then I'm going to take up that aspect as well in my speech, a small speech. We have heard Kansi, we have heard Deepak Baglaji, then what business is going to, what India is going to transform, and what is going to happen, we have already heard them. But let me talk about, if you want to talk about ease of business, but let's talk about business first. What's going to happen to business? That's a very critical aspect to look at it. In last 100 years, the biggest tragedy has happened to the mankind or human beings is this pandemic. Pandemic has still not seen the end. Although we know it will be an end by this year, if most of the people get vaccinated, and it's going to be a normal disease to happen like a flu. But these businesses have changed the mindset of people to a great extent. And businesses will not be as usual what is happening right now. The things which have concerned people is concern for health. People are going to spend more time on their health, and people are going to spend more money on their health. So health is a sector which is going to evolve over a period of time. And when I say health, is not the medicine. Medicine is not a health of the people. It is the well-being of the people. It's a preventive systems which people will evolve in their businesses over a period of time. The people will look for environment. The environment, the concern for environment is gaining at the moment. It was gaining before pandemic, but after pandemic, concern for environment will gain much more momentum. And people will like to save energies. People will like to move from carbon footprint to the more clean energy over a period of time. People will look for more forestations. People will look for work from home. People will look for less traveling. So these things are going to change. Obviously, digitization will come into way of life, so that again you need to travel quite less and use less energy and less carbon footprint. The way people will relax is going to change. It's not that you require a very big car to travel and show off that I have the biggest car in the world. People like to show I have the minimum needs to travel. Maybe some people will like to show off that they travel on a bike, on a bicycle to their office. Why not? So that means we are changing our business. The requirement of automobiles is going to change. I don't think people will have a gas guzzling automobiles in future. We are already talking of electric vehicles in future to come up. We are already talking of hydrogen, green hydrogen as a fuel for use. Maybe not in the automobiles. I see hydrogen being used more in the industry to requirement of the industrial applications. Another aspect is going to happen in future. The way I look at it is, why am I on this world? What is my existence is going to be questioned. Whereas the spiritual factor will come into the being. People have already started questioning. I saw it in Delhi 2 months back when the pandemic struck. You had crores of rupees in your pocket, but you can't help a person to get admission in a hospital. You can't get an oxygen cylinder for him. And I've seen some people getting lost in the process. So what all is this money worth for? We can count billions of dollars and we can count huge amount of estates with us, but what is it worth for? I think this question has entered into mindset of many, many people. And this question will not get off easily. So people will question their existence. People will question their working. People will question, why am I out here? So I think the Indian ethos and Indian ethics of yoga and meditation and spiritualism would gain momentum. I'm not saying it will lead to reduction of economic activity, but these questions will come into picture. People will have higher moral values. I'm very confident about it. People will say, why cheat people? If we can do it judiciously, why not do it? These values are going to get imbibed, and a lot of tourists to India will increase. This is my prediction in future. So I think our government also needs to look at it, the way the businesses are going to change. If businesses are stationary, then you can look at how you can do those businesses. But I think we need to reprogram ourselves or look into what businesses are going to happen after 10 years. Technology is one aspect of it, but to my mind, many, many businesses will change, and some of the people, the old businesses may have to lose out, and new businesses need to come in, and we need to prepare ourselves for those new businesses to come in. Well, once you have business, then ease of business, I think Baglaji has summed up quite well. 2 pillars which he has mentioned, demography, and he has mentioned digitization. There is no word about it that unless digitization is happening, ease of business cannot happen. I remember if you have to do any banking, you need to spend few hours in our early young ages. Today, you can sit on a mobile phone and do the banking. Now, this would not have been possible if digitization would not have been possible. What to talk of digitization? Today, we are having this conference. Everybody in their offices or homes and are doing this conference. I don't think before pandemic, anybody had thought that we can do this. And I must thank that our infrastructure, that although we don't have a 5G, we are only 4G equipped. But in a 4G equipment also, nobody has felt shortage of the digital requirement. So we have bandwidth available. Everybody is doing schooling from their homes itself. No children is going to the schools, have not yet opened out. Colleges have not opened out. But all our yearly exams have been done. Whether it is the 12th exam results, okay, they were from the past data, but still some exams happened in the pandemic from the home. IIT entrances has happened. IIT's education is going on. All colleges education is going on. Medical college is going on. It would not have been possible unless we had this bandwidth and we had the infrastructure to carry on the video conferences. So thanks to all the infrastructure which has been created in past, but this infrastructure in future, digitization is the way to go forward. In the ease of doing business, I will say we have taken a leadership role in terms of software and services. We should not let that go at any cost. We should, today also we are seeing each of the big ones are growing at about 20%. These quarterly results have come in and they are growing at about 20%. So it is likely, this trend is going to continue for India, and we should not lose these leadership positions. And we should continue to do in the software businesses so that our digitization is kept in our mind. We require huge investments. FDI is coming, but if we want a private partnership, this investment need to be trusted, as said by Mr. Bagla. But I think if we talk at the international level, some trust is missing. We are still litigating big investments in the country on taxation front. My request, and from chamber side request, should be we should get it amicably resolved rather than getting into legal issues. The moment we resolve them and not be too egoistic, I'm using a word, a negative word, egoistic about resolving an issue, we will create a better atmosphere in future, although I have nothing to do with those companies. But I'm only suggesting if you talk to anybody, this comes up as a topic of discussions. What about this? What about this? Now, at least as business people, when we talk to our any possible partners, we don't want this topic to come up. So it would be better that if these are resolved at an early stage so that partnership remains there and investment is, we can get much more investment by this process if we do that. Well, I think the future for India is great, as has been said. Many countries are considering as number one. Our ease of business is happening. I remember when I started a business, I was a startup. When I left a job and started my business in the year 88. How difficult it was to start a business and how much time I have taken to become a unicorn. Well, people are becoming unicorns overnight here. Well, that's ease of business. The proof of pudding lies in eating. So we can see people getting unicorn status in a span of 3 to 4 years' time. That's the proof. And it will continue to do it. And I welcome this, and I look forward in my little time left on this planet to see much more unicorns coming up and India progressing very well. Thank you very much for patiently.
Thank you, Maheshji.
Sir, I would only wish a very long life to Maheshji. He's a technocrat. He's a daring businessman. And let's hope that he too has an IPO very soon, where we can all participate and oversubscribe it by at least 50 to 60 times and make him not just a unicorn, but a multi-billionaire friend of ours.
Thank you, Rajiv, for your comment. Thank you.
Maheshji, in your words, business is for life, life is not for business. It is the human and humanity factors that are much more important than any amount of money. Even your products are health positive, human positive. I have always heard you, when we have discussed matters, talk on a higher plane beyond just making money. It is a contribution, it is a service, it is the classic trusteeship of wealth and business and participating in the economic cycle for a larger good, including what good your products will do. Rajiv ji touched unicorn. You're still young, sir. You have a lot of time on the planet. When health as per today's norms, there is much that can be done. I too wish that you will now start a unicorn and overnight have the great success for the good of all that you richly deserve. Thank you very much, sir.
Thank you, Anil.
Let me just add that, we are so blessed today to have such, luminaries of our, who are our former presidents and, who are sharing their views. And it is not just for the benefit of all the participants, but I think, it's a lesson for even the current leadership, like us, who are me and Shakir, who are listening to them and, and gathering what all to do and how to go about fulfilling our responsibilities. So extremely, extremely grateful to be so blessed to have our former presidents there to guide us and to be with us in such, such important events where, we are actually discussing where and how we stand and what all we should be doing to make our country among the greatest in the world. Really appreciate your being here, sir. Thank you.
We now have Sanjay Chaddaji, Additional Secretary, Ministry of Commerce and Industry, on cross-border trade and investment, on ease of business therein, on boosting Incredible India and Make in India. Sanjay Chaddaji is handling international trade with Northeast Asia, including China, Japan, South Korea, Taiwan, Hong Kong, and USA. He is the chief negotiator for the Indian-Korea CEPA review. Prior to joining Department of Commerce, he had also worked as director in the Ministry of Power. He has a direct hands-on knowledge and experience on the subject matter of the day, and it will be very interesting to listen to his thoughts as to what the government is thinking for great improvements in this sector also. Please welcome Sanjay Chaddaji.
Let me just add my welcome to Sanjay Chaddaji also, who has been always a great support to the chamber, sir. And let me just add that whatever problems we have come to you with, I think most of them you have been very, very proactive in heeding them and then finding a solution. And we are very happy to see you in a position to guide the nation's destiny on trade with some of the most important economies and trade partners of our country, sir. Really very, very happy to have you here, sir. A privilege for us.
Thank you so very much for the kind words. In fact, PhD has always been very special to me because I am on your mailing list and I find that, any initiative that is taken by the government is immediately shared by your team with its members. And that's very heartening because, we cannot do an outreach program so effectively as you do it. Because moment a notice comes out, a talk happens, an initiative happens, we find that all your members have got it because I am also on the mailing list as one of the members. So
sir, it's a part of our job description. Sir, it's a part of our job description.
No, I'm just saying you're very good at it because you do it immediately. I think anything that happens today is circulated tomorrow, if not today. It's that fast.
Thank you so much. Thank you so much.
And thank you, PhD, for organizing this third economic conclave and also this very vital issue of cross-border trade and investments. Now, I will not, of course, on the government initiatives, we take a lot of pride. We do keep mentioning that our ease of doing business ranking is constantly going up. The World Bank is constantly saying it's a better place. The Global Innovation Index is rising. And a lot of initiatives are being taken for the industry to be able to function, perform, and do well. Now, I think Mr. Bagla mentioned PLI. The genesis of PLI is, there is twofold. One, I think, if you look at all our schemes in the past, in commerce particularly, were being challenged in the WTO because the subsidies were being made export specific, whereas WTO permits subsidies across the board. So first of all, this PLI is a WTO compatible scheme. And it comes at a time which is most opportune. The reason I say so is that when COVID came, it brought in a lot of challenges, but it also brought in certain opportunities. If you see the investments, traditionally investments were moving vertical. China was a big gainer. Anybody who had a factory, the backward and forward integrations were happening in the same country. It was an era of low cost production, and China was strengthening its factory of the world title. Now, because of the shocks, a lot of sentiment changed. People wanted secure supply chains. People wanted supply chains resilience. So the investment started moving horizontal. There were a lot of people who wanted plurality of production, multiplicity of sources. And with that came a very big opportunity to attract investments. When we look at PLI, I think it can be this sentiment can really be capitalized and accentuated through the PLI to make, as Mr. Bagla says, India a global manufacturing hub. We have all the right credentials for it. We have all the right talent for it. But the thought I want to leave with you is that global manufacturing hub also need markets. And would we be stepping beyond the Indian shores? Would we be looking at international markets? Because if we are to be a global manufacturing hub, we are definitely going to be needing markets. I'll just like to give two examples here. We all know that textile investments are going into Bangladesh in a huge way, much beyond what is coming to India. Now, apart from competencies in manufacturing, is there something else that Bangladesh has? Does it have preferential access to markets? Is that also playing a role? Is it that when you make in Bangladesh, you have preferential access to many large markets where you can make money? Similarly, we have to ask ourselves that when investments, when a bit of relocation happened, why is investment going to Vietnam? Why in such large quantities? I'm sure the right incentives are coming in. The production side incentives will be given by all countries. But does Vietnam have preferential access to markets? Does the investor feel that he can access the global market? It's a sentiment that we have to ask ourselves. Now, today, the global political equations and the pandemic shocks have started making supply chains reorient themselves, if I may say. If we see our history, we have missed the manufacturing bus when China started. We missed it again a decade later when the ASEAN countries got onto it. Now, this is our opportunity to get onto the global supply chains. And would we be able to capitalize upon the PLIs and these schemes to do so? Again, being from commerce, I would just request you to look at your markets also. I leave an interesting thought that apart from the Korea negotiator, I'm also the negotiator for Indo-Canada FTA. And yesterday evening, I was talking to my counterpart and she left a very interesting thought. She says, Japan and Korea, MSMEs do not market directly. They have huge conglomerates who source from them and market internationally. So does Japan. They have these big, large conglomerates who source from MSME and provide the front-end service. She said Canada and India are very similar. We have MSMEs which are directly into the export arena. And she suggested something very interesting. She says, why in our FTAs and SEPAs do we not have a chapter on MSME cooperation? Should MSMEs, can they do it alone, or should we be facilitating joint ventures? There are a lot of MSMEs who would like to partner with an Indian here to access Indian markets. And I'm sure there'll be a lot of MSMEs on the Indian side who would like to partner with the Canadian MSMEs or the MSMEs in other countries to partner. Now, this is an interesting thought, but again, like I mentioned, we'll come to you, we'll come to all the chambers and ask you what are your views on it. Because finally, It's not the government who's going to be in the business. It's the industry which is going to be in the business. And we have to be guided by you. We have to be having inputs from you. A global manufacturing hub, India would be made a global manufacturing hub by you. The government is only a facilitator. The government can only make it easy for you. And in that, you play a bigger role in guiding us and telling us that this is where the shoe pinches. This is where we need you to act. This is where we need interventions. I know that a lot of companies have been vocal. Several of you have guided us. In fact, when the pandemic relief was started, I think the minister was regularly interacting with all the chambers because we wanted to firsthand know where the shoe is pinching. Now, the moment you tell us there is a problem in this area, we try to fight it. But moving beyond that, we also want you to give us suggestions on policy imperatives. We, especially in commerce, would like the industry to guide us on our approach to FTAs, to accessing foreign markets. So far, our experience has been that the other country has gained better into the Indian market than we have gained into that country's market. We need to introspect. Why is it? And that has brought about a sentiment where we are more guarded today. We would like you to have access to markets which are large, which will give you a global manufacturing base, which will integrate you into supply chains. So I would just like to, leave one thought with you before I wind up. You've seen that the global political equations are now becoming very predominant on new and emerging technologies. New and emerging technologies are being ring-fenced. They are not going to one country, whether it be 5G, artificial intelligence, IT, things like that. Now, do we play a role in this? Because there are alignments happening between countries, Japan, Australia, US, on tapping new and emerging technologies. What is the kind of role that we can play? What is the role that our MSMEs can do to get into this, to capitalize on this sentiment? Because we have good equations with these technological powerhouses. Can we in any way make our industry integrate into these value chains? I'm happy when I was talking to Apple. I said, you big guys come here. What is in it for the Indian MSME? And he told me that every iPhone that he exports from China today, he imports a charger which is made by an Indian MSME. So now this is something good. We need to have more than just a charger. We need many more components to be onboarded. And this will make not just the MSMEs grow, it will finally create an ecosystem where the larger mothership will also come to India. So, these are some of the thoughts that come naturally to us, but we are primarily dependent on you because you are the person on the field, you are the person where the action is taking place. For us, we would and should be guided by what you need to make India a global manufacturing hub. Thank you very much.
Thank you, sir. Thank you.
Sir, Chairman Sahab, may I intervene for a few minutes? I would like to congratulate Shri Sanjay Chadha ji for bringing a very analytical study on FTAs. How beneficial have the FTAs been for India? That is a great study. I have gone through the study, and the study has very well analyzed and viewed the India-Japan and India-Korea Comprehensive Economic Partnership Agreement. And the study is useful for the industry to move forward and to participate more and more in the FTAs. Thank you, sir. Thank you, Shri Sanjay Chadha ji, for bringing this great study for the industry.
Thank you, Dr. Sharma. Thank you, Shri Anil Chopra. Thank you all. Thank you so much.
Sir, thank you for, we deeply appreciate your being open to suggestions on policy imperatives. We will keep interacting with you, sir, and thank you for your kind remarks on the proactiveness of the chamber. We've noted some interesting points. You are continuing to work towards making India a priority destination and India a priority partner. You've also touched the point about Indian small, medium export houses collaborating with larger conglomerates here or with foreign constituents so that they can make joint ventures with them, such as in Canada. India as a global manufacturing hub is doable. Yes, there is a holistic effort that needs to be made. But we are all very delighted to hear that every possible painstaking and wise effort is being made to take us in that direction. Thank you, sir. We will keep coming back to you. I now have the pleasure of asking my co-chair and colleague, Mr. Vikram Mehta, to quickly share some thoughts and also to give the vote of thanks.
Thank you, Anil ji, Sanjay ji, Deepak ji, Presidium of PhD, and all participants. Good morning to you. We've had a wonderful session till now. I think Amitabh ji started off by talking about how Southeast Asian countries have witnessed high rates of growth in the 80s and 90s. Let's not forget that one thing which characterized this growth, apart from a huge growth in exports, was a high rate of domestic saving and a high rate of domestic investment. Deepak ji, somewhere, while a lot of FDI is flowing in, but we also need to see how to mobilize domestic capital, increase domestic saving, and channelize it to investments. On one side, we have savers who are looking for avenues to invest. On the other side, our country needs investment. We need to become Atmanirbhar in terms of capital also. We really don't just need foreign investment. I'm one of those who believes that we can very well channelize the growth by domestic capital. So, sir, please also think about what can be done to effectively channelize domestic savings, right from startups to high growth companies to already what shall I say, evolved companies, so that we become Atmanirbhar on our own. A couple of other submissions. The shift from unorganized to organized industry is always good. It formalizes the economy, but it's left a lot of MSMEs in a lot of pain. I mean, coupled with the pandemic, it's causing a lot of trouble down under, while big companies are consolidating and we are seeing good numbers. But let's not forget that the sector which is giving us maximum employment is still struggling. We have our own unique challenges. The Western world focuses on technologies which need less manpower. Our challenge is we need to find industries where we can deploy and engage our increasing workforce. So I would strongly suggest we look at PLIs for employment-oriented industries and not just verticals, because that will really lead to sustained employment creation, reduction in inequality, as well as economic growth. It's great to see, the fact that we are increasing in the ranking, especially with regard to the Japanese and other countries. And hopefully that will inspire domestic investors also to see the same promise, which somehow seems to be lacking. We're always looking at government expenditure to boost the economy. What's really not happened is sustained rate of private investment to channelize growth. Somewhere I think that's also something we need to look at. We have another interesting session after this. Sincere thanks to Sanjay ji and Deepak ji for continuing to support the Chamber's efforts. And we look forward to the next session. Thank you, sir.
Thank you. Thank you. May I now hand over to my other co-chair, Kanika Shriram, to please moderate the second technical session. If there's any Q&A, I have got one or two requests. We could please take it at the end of the next session. We are very keen to be on time. In fact, I got more than one request even in the morning that please be on time. And I'm very pleased to tell you that we are moving over to the next technical session on time. Kanika Shriram, please.
Right, so thank you. And good afternoon, everyone. I think we've had an interesting first round with Mr. Amitabh Kant shedding light on so many aspects. Mr. Bagla there, Mr. Chadha there, of course, our former past presidents. It now gives me great pleasure to also invite Mr. Rajiv Talwar to speak about what is required to now uplift the economy. I think we're all keen and eager to hear your remarks on this, sir. And we'll circle back with a few questions perhaps towards the end of the session.
Thank you, Kanika, and a great session and a great conclave to be a part of. I would only request the leadership, the secretariat, and of course, your team, Mr. Anil Chopra, Mr. Mehta, and you, that at least the speeches of Mr. Amitabh Kant, Deepak Bagla, as well as Mr. Sanjay Chadha, the major points from them should be given out, maybe as a booklet or maybe as a pamphlet, because they were very, very valid. And I think it's been an excellent conclave till now. So
we'll make sure it is done. Absolutely wonderful idea.
Thank you, President Saab. And of course, to keep time, I think I shall limit myself to 5 minutes and begin with by saying that, yes, we need to uplift economic growth. I just want to remind everyone of a remark which I read in the newspapers a few days ago in an article by Mr. Gaurav Dalmia, that the change in China began in the 1970s by Deng Xiaoping saying, to get rich is glorious. In a communist country, to say that, it was absolutely the kind of change which was probably heralded 30 years ago in India when we went in for liberalization and globalization. We've come 10 to 11 times that amount, but yes, the aspirations of a large demography in India are that how soon do we become not only 5 trillion, but how soon do we become a 15 to 20 trillion dollar economy? And they're very good signals. If Japan can say that the country where they would like to invest first in anywhere is India, then I think we are onto a battle which is already half won perceptionally. But how do we win it inside the country itself? First things, of course, I think is that we have a major gap in upskilling. We need people, and yet the workers are not skilled for a very modern way of production, very modern use of technology. And technology, digitization, artificial intelligence are going to be the cutting edge which will make or break whether India achieves 5, 10, 15, 20 trillion dollars or not. So therefore, I think that's something that if we have to foster economic growth, we not only need a change in the mindset of the political executive, the bureaucratic executive, but more than that, the business executive, the country's business institutions, which need to foster a very good partnership with both academic institutions as well as the kind of upskilling that is required for the use of industry itself. So that's something which is really required, and I hope that we can change rules and regulations to say that any 300-bedded hospital or 200-bedded, choose the scale, should be automatically allowed a medical college. It is Dr. Devi Shetty's speech some time ago that India needs 50,000 doctors per year, but we don't produce anywhere near it. I think the kind of expenses which we are seeing in the healthcare system, the only way to get them down is to liberalize like the telecom sector, where we now get data at the cheapest cost. Similarly, we should be having good healthcare at the cheapest possible cost to make an inclusive society. Similarly, an engineering college for any industry, we can choose the threshold, whether it is 500 crores or 1,000 crores. Anyone having an industrial turnover of that should be allowed to make an engineering college, because surely they will make good engineering colleges. Universities are coming up. We've seen Ashoka University, we've seen the Jindal University, we've seen the Amity University, and I'm sure there are many in the south. So we need to bridge the upskilling and educational challenge in order for economic growth to become a reality. Next, I think we've seen in the speeches today that people are willing to invest into India. We have a great institution which the Prime Minister has started. It's called Invest India. I think we need to replicate that many-fold in this country, whether it be through the good offices of chambers like the PhD chamber and others in this country, trade associations, or more than that, business ventures, please. It's time that many people think of diversifying from family businesses into one more vertical, which is actually like Invest India. We need an incubation system to hold hands and to handhold foreign direct investment coming, foreign portfolio investors coming, and make them know the country around and the ways about this country. It's very frustrating. In fact, I know of a very major business house, Indian business house from UK, that they were attending a seminar in Singapore, and only one American stood up and said, "We've got no complaints. There's no problem in working in India. There's no problem in setting up any unit in India." So the entire gathering asked him, "How did you do it?" He says, "Well, I had a very good consultant. He handheld me, and he says we didn't even have to go to India. Everything got set up. He took us through. Maybe there was a cost." He says, "In any case, we pay a cost, whether to our consultants, whether to agencies like McKinsey's or anyone like them, Bain or BCG. But he says we had an Indian consultant, and he took us right through the process of setting up. And he says we are making profits from the first year." So therefore, there is a very big business opportunity for PhD chamber. But more than that, since I can see one great former president, Shri Alok Shriram, and his family member, Kanika here, there's a great opportunity for making business verticals new in family-run businesses, and maybe independent startups too. The third issue I would like to up is that if economic growth has to come in, yes, it has to be inclusive. It has to be providing jobs. And I think there we need to get someone like the chamber to get to various industries or various members and say what is the problem they're getting in providing employment. Because usually what is seen from the side of industry is that how much leaner have we become. Maybe we intend to become lean, and it's a good thing. But productivity is something which cannot be forsaken. We need much more productive staff. We need to get some kind of sentiment in this country that maybe some people who are part of the demographic dividend, but in their 40s or maybe labor coming in, they need to sacrifice a lot. Whenever we get organized in this country, we do find a problem, whether it is, there's one of the questions which was raised in the chat, labor unions, labor restiveness, but we need to get that sentiment seen through perception that we are all contributing to a much, much greater and a much more richer country, where everyone will have better housing, better food, and a better standard of living. We need to get that message through, because while we try our best, it's very seldom that such a message goes through. I think all of us recall that what a statement and what a start was made in 2014 by the present Prime Minister when he talked of sanitation and toilets, and right from the ramparts of the Red Fort on 15th of August. But that is a movement which has come true. We've had a book written on it by Parmeshwaran Iyer in a method in madness. So we do need to evolve methods in what we think is currently madness to think about. There are so many avenues, whether it is convenience of business, whether it is ease of business, or whether it is economic growth. If we have to achieve 10% growth for 30 years to make the next generation get a per capita income of $10,000, I think we have a long way to go. We need to change perceptions, and we need to take hard knocks. Anil and your committee has very rightly been saying that we always give good suggestions to CBDT, to CBIC. We always give very good suggestions on how to improve revenue, on how to make changes, on how to be less harassing. Similarly, we need to be now giving not only suggestions but action points on how we can actually promote economic growth, see what is coming in the way of that, and then make suggestions, because we do have committee meetings, we do have a managing committee meeting every month, we do have such excellent conclaves and seminars and webinars, and this chamber for the last 2 years has been the front runner in making webinars. What excellent webinars have come through, and the amount of time devoted by not only Sanjay and the Presidium right now, but even earlier by DK Agrawal ji, and I think the Secretariat. They've done an outstanding job, and we just need to build upon that. That's all. I think I have much more experienced people like Alok who are to come into this conclave right now, into this session, and I'd leave it to them to give the hard brass tacks and the hard knocks. It's nice to say pleasant things for me, but it'll be better to hear from him. Thank you very much.
Rajiv ji, thank you so much, for really putting this whole thing online, and then, talking as the elder of the family. Really grateful. You have put the things absolutely perfect.
I can't even pretend to be young now. Elder of the family I am, yes.
I can claim to be a bit younger than you always.
Thank you, sir.
And I'll always be a bit younger than you.
Thank you, sir.
Sir, thank you very much for your remarks. I think specifically also on upskilling, what you've talked about, I think it's such a need of the hour, because we're talking about digitalization, for example, but at the grassroots level, our workers need to be upskilled continuously. We're moving up the sort of automation, digital value chain as well. And we need to sort of keep that in tandem also. And I think as per your last suggestion, I think one of the things we've also discussed previously within our committee is actually breaking down the exact specifics of what it is we need. We speak in holistic terms saying ease of doing business, but what specifically per the law, prevailing laws, where are we looking to amend that to actually bring about the ease of doing business? That's something hopefully along with the chamber we will definitely be working towards as well. So thank you again, sir.
I would again say that please, in every committee meeting, especially the managing committee, there must be a mention of some good starts made by, this is a chamber of commerce and industry. If our members of the managing committee, their children don't get new openings, they don't make new successes, they don't get into new unicorns, we would be failing in our duty as elders, as Sanjay said.
That's a point well taken, absolutely. Yes. Thank you. It's my pleasure to invite Mr. Alok B. Shriram, Senior Managing Director of DCM Shriram Industries Limited and former past President, PhD Chamber, to give his remarks, please.
Muted.
Okay. So can you hear now?
Yes, sir.
Yes.
Thank you, Kanika. President Sanjay Agarwal, Vice President Saket Dalmia, my co-panelists, Professor Bhanumurthy, Dr. Pranab Sen, my colleague Rajiv, and all the members of the managing committee and guests who are in the seminar. It's my pleasure to be speaking here today. And I'm not here with any sort of crib list, but positive suggestions, and hope they'll be taken in that spirit. I'm going to make some sort of slightly randomish points, but I'd request you to bear with me. I think the first thing I want to say that there's a huge change in the government attitude at the political level. In the last decade, I think in seminars like this, we were always speaking in a very guarded way and not making any basic points or anything hard. I think the first thing is now we can speak our mind, although politely. I think this is a very big step forward, and we must appreciate the government for that. I think it's really a good thing. And we can see that they've taken many big steps which have gone towards improving the ease of business. I'm sure Amitabh ji mentioned all this in the morning. But as they say, dil mange more. and we have a lot more to give or to get from the government in the ease of doing business. The next point I'd like to make is that each country has to choose its own path to success and growth. Everyone has their own set of problems. It's very difficult to compare us with a Singapore or a Dubai, which people, especially people living abroad, keep doing. But we are a different country. We have a huge problem in the size of population. We also have great opportunities in size of population. We have a problem with education, skilling, level of poverty. So I think we have to find our own path, which we have been doing for many years, but we need to keep doing for many, many more years to bring our citizens to a much better level and standard of living. Ultimately, the objective of any country is to continuously improve the quality of life of its citizens. It's not just a one-off thing. We have to keep doing it. And it's something that I think India has done, but in slight bursts and starts. I think we are now at the threshold of doing the next thing. We had the white revolution, we had the green revolution, we had many revolutions. And I think we are at this threshold of the next set of revolutions and the next generation. To my mind, and it may be a little simplistic, but the single largest problem that we have in India is unemployment. A large part of our citizenry is unemployed or underemployed, and therefore they are living in poverty. And I think that is a collective failure of the government, the bureaucracy, and all people like us who have got a lot of good things from the country. It's our job to ensure that this carries on down right to the last citizen. And I think this is the single largest problem. And we as businessmen, the first thing we can do is to create jobs. It's not about CSR. It's not about giving donations. It is about creating jobs. That's our primary target as businessmen. Some of the other thoughts I had was, one is that I'm a great advocate for the MSME sector of industry, which PhD also represents in a very big way. And I think the government has taken some steps to allow the MSMEs to become bigger, to achieve some sort of scale. But even then, we have not allowed them enough leeway. Today, we are still talking in terms of 10 and 20 and 30 crores in terms of turnover and few crores in investment. This just has to change. If you see MSMEs in any big economy, and we claim to be in the top 5 economies of the globe, you cannot stick with the old dogmas and continue with them. You are just creating a whole lot of dwarfs which do not have any economic strength. And we must change this. We must allow MSMEs to come up and go to global scales. In Germany, a 2,000 crore company is also considered a medium scale industry. So why don't we look at numbers like that? If we still stick to 20, 30 crores, we're not going to get very far. The next is that in this pandemic time, which is, it's in my lifetime, I've not seen something so terrible hit the country as a whole and the world as a whole. I think we should not go in for controlling fiscal deficit. Even now, the government is talking about keeping fiscal deficit in check. My estimation is we should allow this to go a little higher. The government is doing a lot of infrastructural spending and public spending. This is certainly one way of allowing incomes and money to go into hands of the consumers, and hopefully they will spend. Time is getting compressed in every activity we do. As a kid, what happened in 10 years, now in our time happened in maybe a year, and now is happening in 3 months. So the time that we take in the government to do things must also change. It is still taking years for anything to happen. Even simple things where you go and talk to half a dozen people in the government who matter, and they say, yes, you've got a point. But making that change is still taking years and years and years. I think that is something we must do, is to change much faster, take quick decisions and push them through. The next point is the government is coming out with many schemes and promises, and they are not following up these in actual practice. A case in point is in the exports, there's the MEIS scheme and the replacement for the MEIS scheme. These, although they've been announced more than a year ago, even today they have not come into practice. I think this must change. If they make a promise, they must act upon it quickly. Rules and all must follow as fast as the legislation. Another point is in the commercial dealings, the legal system must be expeditious. Today, this thing of having legal questions or simple legal problems taking 10, 20, and 30 years to be dealt with is not acceptable. In today's day, that's one of the biggest scare FDI has, is that if we get stuck with something, it's going to take us 20, 30 years. I think if we start a business so easily as they've done it now, we should be allowed to close a business that easily, but it's not happening. Laws of contract are not being enforced by the courts in a hurry. I think the key question here is in a hurry. It still takes 10 years or 20 years. So that's the next point I had. Two other key problems in industrial development of India is the land laws and the computerization of land acquisition. This must become simpler. I think by just doing this, the cost of land, which is a problem many industries have, will come down. The next is the labor codes. I think it's taken 20, 30 years of discussions at the parliament level and with all stakeholders to come up with these labor codes. I think it's necessary to now bring them into practice. The states who want to do it should be able to do it in the next few months so that the investors can then talk with their feet. If they like the labor codes, they will go and invest there. The states which are left behind will then have to take a very hard look and say, do they want the new labor codes or they want the old labor codes? For MSMEs, one issue is the compliance and the laws. You see, whether you have a 50 crore company or a 500 crore company or a 5,000 crore company, they are all subject to the same SEBI, MCA, and various other regulations. I think for these smaller companies, because many of them are actually run by technocrats, there must be some huge simplification that they don't have to spend unnecessary and inordinate amount of time doing bureaucratic work, but they continue to develop their businesses. I think a case in point is what we've seen in Kerala, and maybe I'm wrong, there may be some political angle by what I hear, but you had a garment exporter who was one of the biggest employers and businessmen of Kerala, moving out of the state of the Kerala for reasons that he was not happy with the way he was dealt with in his home state. And I think this is not a single story. If you talk to industrialists, big and small, this is a story with many people. The next point is that in the government, many committees are formed for issues regarding business. But in most of these committees, the representation is of either bureaucrats or of consultants or of professionals. The representation from the business community is comparatively small. There may be just 2 or 3 people in a committee of 25. I think this needs to change, and I would urge PhD to do a small study of this and then push this with the government very hard, that the business community must be involved in all the committees and have a voice in a fairly big way wherever business is involved. Next is that there is a huge set of contradictions in managing the old world and the new world. I think now is the world of checks and balances versus control. The government needs to appreciate and give up controlling things and move to checks and balances. At the same time, I think there should be a swift retribution for white-collar crime, both in law and through the IBC, etc. I think that is unfortunately being diluted. So this is something that I would say must be taken seriously. We must free the youth because the next generation is coming all the time, and there's a huge difference in the way they do business and the way we all learned business. And I think they should be free from the historical baggage. If they have to become world beaters, they cannot do it in the ways and processes we were used to. The youngsters must be freed up to do businesses quickly. And they can do it, they can become bigger. We've seen the case of unicorns coming up. I mean, companies like ours have been around for over 100 years. And compared to some of these unicorns, which have been here hardly 10 years or 15 years, we are really small. So I think we must have faith in the youth, give them a baggage-free environment, and they will again come back and surprise us every time. Finally, I would say in closing that it's not business as usual. The old paradigms are being destroyed, and the time has come to compress the time frames of any activity. And even communications now cannot be this huge, lengthy communication. They have to be short, crisp, and to the point. We as a country can't do everything. Interdependence is the order of the day. We have a huge foreign exchange reserve. We must leverage it to allow our in-house industry, the Indian industry, to grow. We must allow them to be interdependent on partners all over the world, as is done by any industry. You go to Thailand, you go to Japan, they have the whole ASEAN belt, which is their partner. You go to America, Central America, Southern America are all their partners, as is Europe. Even China, I think, is a reality, and we must use it. While we say that, China ke paas mat jao, but the fact is China-India trade is growing, and they have so many advantages. We must be able to take advantage of those advantages rather than try and create barriers which don't really work. Even now the Indian trader or business community is going there. So with those points, I'd like to just say that I have a great hope in the future of India. I think the youth of India is going to move us forward and propel us to great heights. But we need to unshackle them much, much faster than we've done. And that's not saying that we haven't done. We have done a lot. Thank you.
Alokji, thank you so much. I think, Kanika, I'm just going to take over your part for your dance. But, let me just say that almost everything Alokji has said is something that I agree with. These are some of the points that throughout the past 1 or 2 years, the chamber has been taking up very strongly. Most of these points deserve merit very serious consideration at the highest levels. And I think you have given us a proper, you have given the participants a very proper view of the actual things that we as a chamber have been asking for a long time, and especially during these, post-pandemic time since the last year. And I think this is actually not just a wish list, but it is a to-do list. So thank you so much, Alokji, on that. Thank you. So Kanika, you can take over from here.
All right, sir. Thank you. Before I introduce my next two panelists, I think something that I'd be keen also if we could request you to throw some light on is COVID. We've just been through two very strong waves in our country. We're sort of just starting to emerge from it. You hear opinions and views that COVID is here to stay. There will be not just a third, but a fourth and a fifth and so on waves. What can the government also do, or what can we help the government do to sort of ease the way through that as much as possible? Yes, of course, vaccination is one way forward. We are hoping that will help obviously bring down the severity of this virus. But how can we sort of proof ourselves and our economy against what is yet to come? With that, it gives me great pleasure to invite Dr. Professor N.R. Bhanumurthy. He's a renowned economist and Vice Chancellor of Base University, Bengaluru.
Yeah, thank you. First of all, can you hear me?
Very clearly.
Yeah. So first of all, let me thank PhD Chamber, President Shri Agarwal ji, and other members of the PhD Chambers for inviting me to this third economic conclave. It's always pleasure. I don't know how many times I have come to this chambers meeting. For almost 10 to 15 years I've been coming, and not sure I make any soothing remarks. So today we have this third conclave on ease of doing business and uplifting economic growth. And we had a very interesting comments in the first session. But I do believe that these two sessions are very interrelated. I think that's what we are talking about. Ease of doing business, we have come a long way. I think it's also right to, it's also contextual to really talk about this ease of doing business because this is the year we are completing 3 decades of economic reforms. I'm sure there's going to be a lot of discussion on what actually happened in the last 3 decades and what are the unfinished agenda in terms of the economic reforms. As we know that economic reforms is a continuous process, and we do see that the government of the day has been taking in a big way to bringing some of the difficult reforms that have been pending for quite some time. And government is also focusing on some of the reforms that Sri Alok Shriram also pointed out, like land reforms or the labor market flexibility and all those things. Having said that, I also need to really caution this ease of doing business is just a number in my view. We have come down from 140 in 2014 to somewhere close to 63. And now, as and when the new numbers are going to be coming up, we may be somewhere close to 50, as the Prime Minister has envisioned. But in terms of the outcome of this, improvement in the ease of doing business, I'm not really sure. Actually, we have really shown any kind of positive, outcomes. If you look at the GDP growth, we all know that we have come down very drastically in the recent period, even before the pandemic has hit. In terms of the private investments, we have come down from 30% to 20% right now as a ratio to GDP. And in terms of the potential GDP growth, again, we used to talk about double-digit growth for quite some time, but now I think the potential GDP of this country would be somewhere close to 6 to 6.5%, nowhere near 8% that we talked about. So the point I'm trying to derive here is the correlation between the ease of doing business number and the GDP growth, the GDP growth potential. So I think we need to be a little wary in terms of how we use those numbers. This is at the all India level, but if you look at the state level that Niti Aayog is doing for quite some time, at the states, a lot of competition is building up between the states. As Mr. Alok Shriram pointed out, the recent episode between Kerala and Telangana, I do take it as a very positive thing that there is a subtle competition between the states that is building up. So if one state is not able to attract investments, that may be maybe the other state trying to attract. I think I take it very positively, that particular point. But when it comes to the numbers, again, if you look at the numbers for Lakshadweep and the state where I'm right now, it's Karnataka. We know that the Lakshadweep and Karnataka are not comparable, but Lakshadweep is ranking better than Karnataka, and we all know what's happening in Lakshadweep right now. So the point I'm trying to say is that I think more than this, the number that the government as well as the World Bank provides, I think what is very important for improving the business sentiment is bringing down the overall cost of production. I think Mr. Rajiv Talwar also pointed out some time back, and I think you need to bring down the cost of production, bring down the transaction cost, and you need to improve the governance. I think that is something that we need to keep in mind. In fact, there are some of the states which are ranked better. The investments, if you really plot the state rankings and the kind of investment that has gone, actually you will be surprised that you will be seeing some kind of a negative relationship. So in a sense, what I'm trying to say is that ultimately the businesses will go where the cost of production is lower, and you have a much better governance mechanism. I think those are the two things the overall index doesn't really focus much on. So as I said, Again, somebody raised the issue of 5 trillion economy. I think again, this is something is completely missed out in the overall government discussions. If at all we want to uplift the growth, we need to bring back this 5 trillion economy concept, and we need to see what all we need to do to improve that overall growth potential of this country. And as I talked about 3 decades of reforms, 2 important aspects that happened in the 3 decades of reforms. One, again, the domestic industry doesn't really comment on this. One of the biggest reforms that happened in early 90s was bringing down the import tariffs. You know, all of you know, some of the elders in the chambers know better than many of us, the kind of difficulty in, importing some of the raw materials or some of the capital goods. It has actually brought, in my view, that is the biggest reform that happened on the trade side. The trade policy reforms, other than the exchange rate devaluation, I think the biggest reform happened was on the import tariffs. But 3 decades down the line, we do see a reverse of that. I mean, the recent period, we have seen how the import tariffs have been increased. To my surprise, in the recent budget, there was that old document of the tariff lines have been brought back as an additional document in the budget. So I think, although the government is doing many things for the long term, but I thought that increasing tariffs or bringing the tariff book is something may not be helping in improving the growth potential of this country. So I think that's some. In fact, even the trade economists, like even the hardcore trade economists like Arvind Panigaraya and all those people are actually criticizing the government, especially when we talk about import tariffs. And the second important thing that which I would like to highlight, which I maybe not much of interest for the industry, but when we talk about 3 decades, when we talk about public policy intervention, one of the important ingredients for any good public policy intervention is the, robust statistical system. I know it will not be much interest for you, but I can tell you that better statistical system will certainly help industry in a big way. Again, Sri Alok Shriram highlighted about MSME sector. Recently, when the Atmanirbhar Bharat package was announced, and there are a lot of the views on providing more support for the MSME sector, the government came out with the proposal, but then there is no way it could be implemented, because you don't know who is this MSME at the state level. So my point is, I think even the industry need to help government in strengthening the statistics. So without statistics, you will not be getting a good public policy intervention. I know Dr. Pranab Sen is going to talk about talk after me, but this is something at the end of 3 decades of reforms, I would certainly feel that one of the things that has deteriorated in this country is the overall statistical system, and it will have a huge impact on in the domestic industry, the way the public policy making is going to happen. Somebody talked about inclusive growth, but if you don't have proper statistics, how are we going to achieve inclusive growth, right? I think that is something that I would like to highlight. But there are many good things happened. One small point I would like to highlight, and I'll stop there. In the 3 decades of reforms, we are good at comparing India and China in many ways. But again, we cannot be comparing at a peripheral level. We need to undertake rigorous analysis to see what exactly happened between India and China in the last 3 decades. One positive thing that happened is the recent study by RBI says that the total factor productivity growth in India has actually exceeded China in the last couple of years. So that's a good news, and that is something need to be attributed to the domestic industry, and you're all part of that. There is a study, I think, Dr. Sharma, I think you need to share this. There is a study, it's called India CLEMS report. KLEMS, that is Capital, Labor, Energy, Material and Services, which is there on the RBI website, and you can easily, it's free to download and see the numbers. In fact, they have estimated at a firm level what is the trends in the total factor productivity at the firm level. So, and that will give you some kind of a feel. What are the areas where the India has done very well, and what are the areas, what are the sectors that India needs to focus. So, so we have done well over a period of time, but the recent decline in the potential growth is something that we need to really focus on. And I think sometime back, Mr. Amitabh Kant has said the slowdown in the potential growth is actually because of a lot of reforms happening at one go. So I think that could be there may be some merit in that, but we need to see how those reforms are going to stabilize. Like IBC is work in progress, GST is in work in progress, privatization is work in progress, disinvestment is in work in progress. So there are many reforms are on the pipeline. So I do hope that 5 to 6 years down the line, we should be talking about double-digit growth, provided all these reforms are stabilized in the country. Thank you so much.
Thank you, sir. Thank you for your remarks. I think it's interesting what you had to say, because certainly it's a very big factor that if the potential for India's growth is not where we see where it is definitely a major area of concern. But thank you once again. It gives me great pleasure now to invite Dr. Pranav Sen, Program Director, India Program, International Growth Center, to kindly give his remarks, please.
Thank you, Ms. Shriram. It's an honor to be here. I'm very grateful to the PhD Chamber for inviting me to make this, to give this talk. I've been listening very carefully to all the preceding presentations, and I must say that between Mr. Vikram Mehta, Mr. Alok Shriram, and Dr. Bhanumurthy, much of the ground has been covered. But let me pick up on a couple of themes that emerged from these discussions and perhaps elaborate on them a little bit. The first thing I think we need to recognize is that when we talk about the potential growth of a country, it's not something that happens in thin air. The potential growth of a country is the growth that will occur provided that a certain level of investments will happen. So it is totally driven by the level of investor confidence in the country. There will be ups and downs around it depending upon the business cycle, but ultimately it rests on investor confidence and, of course, the availability of investable funds. Right? Now, this is really the point which we need to focus on. I think a lot has been said. And the question we need to ask is, what happened that our investment rate, which had gone up to as high as 38%, came down sharply? It was sub 30% prior to the pandemic and continues to go down. It's not just the level. It's also the trend that is revealing. Is it the case that investor confidence has been coming down? That Indian investors no longer feel emboldened enough to take the kind of risks that they were taking in the earlier part of the 2000s? And that's a soul searching that we have to do. Now, if you think again, of how we used to talk about the Indian economy, we used to think that about 28 to 30% investment rate was good enough. But then in a short period of just about 6 years, it shot up from 30% to 38%. And it continued. Then there was a downturn, the global crisis happened, all of that. But the essential question is that we never really, our investments never really recovered from the global crisis. It's happened elsewhere in the world. But we who were actually not very affected by the global crisis, except marginally through the trade account and a little bit through the financial sector, we never really recovered from it. So that's something I think we need to keep very much in the forefront of our thoughts. Okay. The second issue, and this is even less talked about. The second issue is that when we used to, and I'm talking, when I say we, I'm talking of people of my generation, I'm talking of people who were working very actively in the 90s and the 2000s. Our view was that if you could get a 30% investment rate, that would give you, on the average, a 30% investment rate would give you about 6.5% growth. Actually, sorry, 7.5% growth, not 6.5%, 7.5% growth. So we were fairly sanguine about the attaining that 7 to 8% growth rate with the kind of investment intentions that we were seeing. We were surprised, of course, when it went up. But what has happened over time is that particular relationship seems to be breaking down. Today, if someone were to ask me, what would a 30% investment rate, so if the Indian investing community invested 30% of GDP, how much growth would I get? And my answer would be, it won't be 7.5%, it will be 6%. Yes. Now that's a pretty sharp drop, right? And at some point, we have to do a little bit of soul searching and ask ourselves the question, what is going on? Why is it that we are now getting less bang for the buck than we were getting earlier? And that's a question that is not asked, because the focus seems to be primarily on getting that investment rate up. Why is this fact that the volume of investment is not translating into growth of GDP? And the reason for that is actually fairly straightforward. The reason for that, I think we are in a situation where, in an important sense, we are over-investing, given whatever is the limited amount of investable funds we have. That is, the capital intensity of Indian production has gone up very, very substantially. The question then arises, why has this happened? Where is it getting reflected? Why is it that a country which has a huge endowment of labor is going in for more and more capital-intensive production methods? And there are two answers, I think, that one needs to look at. The first is that the whole debate around the structure of interest rates. We talk a lot about levels of interest rate and interest rate policy. We don't talk that much about the term structure of interest rates. Now, why is this important? The reason it is important is that if you don't get the term structure of interest rates right, you could end up doing precisely what we are doing now, which is encouraging capital intensive production methods compared to more labor intensive ones. Now, not so long ago, and I'm talking now about the late 80s, the then Fed chairman in the US was asked that what she thought would be the appropriate spread between a 1-year term loan and a 20-year term loan. And the answer is, for the case of the US, was 350 basis points, 3.5%. And this is US, which is a capital surplus economy, right? I'm sure you gentlemen know what is the spread between the 1-year rate today and the 20-year rate in India today. And the answer is 1.2%, 120 basis points.
Dr. Sen, sorry to intervene. Can you increase the volume from your laptop? Because I am getting so many messages that volume is very low.
But no, I can't increase the volume. This is the maximum volume.
Okay, okay.
If I'll just come closer to the
yes,
mic.
yes, that would be helpful. Now it's okay, sir. Now it's okay.
Now? All right, good. So, as I was saying, that think of what is happening. If between a 1-year term loan and a 20-year term loan, the spread is only 120 basis points. And even worse, if you look at working capital loan, which is usually a 4 to 6 month loan, and a 20-year term loan, it's 135 basis points. Right? So what would you do? What would any rational investor do? The sensible thing would be to go in for capital intensive technologies. That is almost a given. Now, this is the only solution to that is actually by gradually increasing that spread. The point is that this now gets caught in a very, very virulent debate, which helps no one, because the impression that people have is that when I talk about increasing spreads, what will happen is that the 1-year rate will remain exactly where it is, and the 10-year rate will go up, or the 20-year rate will go up. But that's not the point. The point is, if I take the average interest rate as constant, for every 1% percentage point increase on the upper end of the tail, I should be able to do a 1 percentage point decrease at the lower tail. And that's what gives you the slope, which means that your working capital costs go down dramatically. Right? That is one of the things that we have not been discussing, we have not been debating. The whole conversation, unfortunately, has been taken over entirely, and I use the word entirely, by the investment bankers, particularly the foreign investment bankers, for whom a very flat yield curve with very little spread is great news. But in terms of the country, in terms of the economy, in terms of our behavior as investors, I think it's very deleterious. The second thing which is linked to that is something that I think Mr. Talwar made very forcefully, which was on the issue of skilling. and upskilling. Now, we have a very interesting situation in the country. I don't know if you gentlemen have come across this bit of information. Do you know that the income that is earned by the average income in the country, I'm talking about, by a person who is an 8th class pass is higher than the income that is earned by a higher secondary pass. Then when you move into a graduate, the salary goes up very sharply. But that critical period in that middle, which is how do you upskill if you cannot persuade a person to move from class 8 to graduation? How do you do it? It's something we need to think about. Why is it that a matric or a class 10 pass and a higher secondary pass command less wages than a class 8 pass? And this has come time and time again in our labor surveys. It's something we need to ask ourselves. Now, this is where the whole skilling issue comes in. Is it that the employers feel that that additional 4 years of education that a child gets between class 9 and class 12 really does not add to his productive potential unless he uses that to become a graduate? And so industry is being perfectly rational. Industry is saying that if the 8th class pass person can give me just as much productivity as a 12th class pass, right? I am getting 4 additional years out of this employee. That's a hell of a lot of work. And you'll probably be getting him cheaper. So we need to really think very carefully about our post-literacy, which is 9, 10, 11, 12 class curriculum. Are they suitable for giving our youth the skills that they need beyond literacy, which would then enable them to pick up skills more readily than they would otherwise? So if you look at the skill development programs you have, what you will find is that with all the best intentions, the entry level is always 8th class pass. None of them are really asking for matric or higher secondary. So what is with the school system? What is it that we are training our children? And how is that then getting reflected? So Mr. Talwar very rightly talked about productivity. And the heart of productivity, one, of course, is the formative years that everybody agrees upon that our systems don't work very well, which is up to class 5. The ACER reports paint a very, very bleak picture. But I think an equal focus should be on the last 4 years of school. And the question that I think industry needs to ask is, do these 4 years give the child abilities and skills which enable him or her to be potentially more productive than a class 8 pass? If not, we'll continue to be in the kind of problems that we are facing. Let me now very briefly touch upon I think a point that was raised by Kanika Shriram, which is on what COVID has done. And how would it change the way our system works? I think there's already been a lot of talk about the work from home experience. And all of that is well taken. I'm not going to go into that space. But the space that we really do need to think about is that of migrants. Because everybody around the country knows the critical role that migrants have played in actually filling skill gaps. What has COVID done? At least for one generation, maybe longer, I think it has implanted a seed of fear, which is not going to go away that easily. Earlier, it was the fear of going into an unknown space. What COVID has done is it has instilled the fear of a known space, but without support systems. The question is, whose responsibility is it to develop the support systems? This is in the interest of both the state government as well as industry. And it cannot be done by one without the active cooperation of the other. And mind you, as I said, this is not going to end now. This is the first time it has happened that this kind of fear has gotten into the minds of our migrant workers. And it's not going to go away in a hurry until and unless those support systems come in existence. I think we are going to face a bigger challenge in terms of the skill availability for industry. Somebody talked about industry voting with its feet and moving to locations. That's actually far, far more expensive in terms of national resources than people moving with their feet. That's much easier, much cheaper, and usually much more efficient. The question is, have we even begun this debate? And this is a debate that individual industries can't take up. It's something that chambers will have to do because it's a collective problem. And the question is, have we started preparing for it? If not, I would strongly urge that we do so now. My last two final points. The first point is very brief, which is I completely agree with Dr. Bhanumurthy on the issue of the tariff changes that has happened. They are retrograde. And what it is saying is that after having reached certain levels of efficiency and international competitiveness, we are now willing to tolerate laxer standards in terms of our own productivity. And I think that's a very dangerous message to send. And I'll stop there for that. Then lastly, to the statistical system, Bhanumurthy squarely sort of put that on my lap. There's something very interesting that has happened. The statistical system has always been important. But earlier, the statistical system was used essentially as a tool of decision-making, whether in government or in industry. As the head of the statistical system for more than 10 years, let me tell you my personal experience, which is I was interacting far more with industry than I was interacting within the government. Many, many, many times more industrialists will be calling me up. Right? So this has always been there. And The important thing is that if you actually, and Mr. Sriram, you would know that until 2014, no election speech ever talked about numbers. Statistics was fundamentally unimportant to the political discourse. Mr. Modi changed that when he projected the Gujarat model and showed how Gujarat was so much better than everybody else. But statistics today has been politicized. This was never the case earlier. But today, no politician will make a speech without throwing statistics into it. This makes the work of the statistical system very, very much more difficult. And I think and I completely agree with Bhanumurthy, the importance of statistical data is so high. I think there is a lot of utility in, again, a coalition of like-minded people trying to get the government to decrease the control over the statistical system. If not, we may not get the data that we need, and even if the data exists, we may not get it in time. But this is a very recent development, and it's something that we collectively have to address, and we still haven't begun. I'll stop here, and I'll be happy to take any questions. Thank you.
Thank you, sir. Thank you very much. I could see a lot of heads nodding along all the panelists over here, and I'm going to quickly point up to Mr. Sriram because I could see him sort of nodding quite vigorously when you talked about specifically, I think, the greater need also for industry participation amongst the business, amongst the government corridors. We've seen some part of it, and I think added to that, he did also talk about time sensitivity. We've heard since the morning that there are many schemes, for example, that have also been introduced. But what is the time sensitive aspect of these, right? Lastly, you talked about COVID, right? And specifically in terms of the migration of workers. I'd invite Mr. Sriram's thoughts on that as well, please.
Thank you, Kanika. I think the issue on COVID, which Dr. Sen talked about, it's very, very important. I think this migration of workers and how they will try and go back to their safe zone, if I may call it that, and how the country is going to react to that is going to become of paramount importance. I think that's a very important point. Another point he made was about production and productivity. And that is very important. Production is easy, productivity is not. And we have to find ways to deal with productivity, improving productivity, especially in our new regime of work from home and other costs of doing safe business now. So I think this is very important. And as far as statistics are concerned, I think Professor Bhanumurthy also talked about it. Dr. Sen also said. And I, as a user of statistics within our own businesses, I think the first thing is we have to come clean and learn to respect statistics. They throw up situations, they throw up facts and figures which give rise to very clear decisions and situation analysis. What is happening, I think, to some extent is now people are trying to change the goalposts and change other things to suit results which take care of their arguments, if I may put it that way. And I think that is not a good thing. Statistics are basically facts in numbers, situation analysis in numbers. We must have the courage to confront them and then take actions. So I think this statistics is something I have a lot of respect for, but they can be used in the best of ways and they can be used in the worst of ways. So I hope we can get back to the best of ways. Thank you.
Thank you, sir. Mr. Talwar, I can see is back. I think Dr. Sen made some very interesting points. I think in tune with what you were saying, sir, regarding upskilling, where he did also talk about the labor survey and an 8th grade graduate, 8th grade pass, having more earning capability than somebody who's done higher secondary. So if you'd like to comment on that, please.
I would certainly like to, but more than that, I just take a minute on the statistics. I think it's very essential what Alok said and what's been brought out by Dr. Sen, that yes, we need to take statistics more seriously and sometimes have a new look around them. Because he talked about COVID too. And in a very myopic view, because I belong to the real estate industry, I think, the Prime Minister's program of housing for all, a 300 square foot pakka house, I think that also we totally ignored. That anyone who had a pakka house, did he become a migrant or not? Initially, he may not have been a migrant at all if you are living in a pakka house. It is those who live in unauthorized colonies where the landlord bears down very heavily on you immediately, or those who are living in shanties have to make a getaway straight away the moment adversity hits them, because they have no means of support. But not only is it a financial support, it's also a great emotional support if you have a pakka house, what we call a pakka chat over your head. So I think we need to get some statistics to see that what we are trying to make only 1 crore homes and pakka houses or housing for all or Prime Minister's Awas Yojana under that in the cities, we need to go into about 5 or 6 crore homes. Not only to give them to millennials and to the poor, but also to allow ease of mobility. And then if I can come back to the class 8th and class 12th, excellent analysis. And I think which brings out the need that what he said was that you get an 8th class pass at a much cheaper rate. He gets 4 years extra and he becomes an expert in that trade perhaps, which the class 12th graduate seemingly has no advantage. But we need to upskill them that today when you are getting labor, whether it's for, any industry, we look at it from us that, okay, plumbing, electrical, even shuttering. Those people need to be actually taught somewhere and upskilled to use the latest technologies, because technology will be the distinguishing factor. We are putting in everyone, it's like the fashionable thing to do, which was the BBA. First, it was BA when India was trying to produce clerks, that anyone who had done a BA in any subject could come and join as a clerk. The second thing was that it became fashionable to have a business administration bachelor. So everyone was joining BBAs, and where they were doing and what they were doing in BBA, no one knew. They ended up in the same manner. So we need to now offer them a much larger palette of jobs, and maybe they will somehow choose that, yes, if this is my line or this is the most convenient for me, I need to upskill my technological knowledge so that I fit into a slot which gives not only a better salary, but also a better productivity factor, because they know how to use modern technology in a much more easier manner. Those are but I stand to be corrected. I stand to be advised by people like Professor Bhanumurthy or Dr. Pranab Sen. They are much more wiser, and perhaps they do much more research than people like us who keep on going about life.
Rajiv, I think let me just make one little point about the housing thing, which I think is very important, by the way. That is, if you provide migrant labor with pakka housing, I think the chances of retention go up many, many fold.
Correct.
The problem is that if you look at the housing scheme, which I have, what it requires is the beneficiary to be able to provide the plot of land.
Sir, can I come in? Can I come in? My problem is exactly the same. That the moment you start giving out free doors, there will never be any housing.
Rajiji, one moment. There is some background noise coming from somebody. Probably it might be Anil Chopra ji, because I think all others may kindly be muted, because we are hearing a continuous. Yeah. Now you can speak, Rajiji, please.
Haji, my idea was that we need to create a surplus of housing. If you don't have a surplus of housing, you will continue to have illegal unauthorized colonies. I've actually attended a seminar by DDA about 2 months back, where one illegal colonizer said, you can do anything, you can do any master plan 2041. Our business is to cut out colonies. Hum to kaatenge. And we will make illegal unauthorized colonies, which by force of numbers, you will keep on regularizing later. My idea was that, yes, you need 5 to 6 crore homes in government land, and probably on a daily rent of 30 rupees to 50 rupees. It needs to be rental housing. It does not need to be owned housing. But if the housing is large in number, the rentals will come down, as many of us in many good colonies know. That the larger the amount of houses, the lower is the rent nowadays, thanks to the last 2 years experience. So similarly, we need to give much greater economic turnover, use of steel, cement, ceramics, glass, whatever, and that be good for economic growth. But more than that, promote rental housing, because a person it must be permissible under circumstances to leave a place in Delhi and perhaps go and settle, I mean, not settle, but work, maybe in the south somewhere, maybe in the east somewhere, but there has to be a good amount of housing. Housing was always as a shortage. I mean, that's what happened during the British Raj. It probably continued because land became a subject which could be easily exploited. So why get into that? But we need to provide greater housing for greater comfort and some commitment. Children's education, women's education will be much greater when you have a pakka house and you can go to a nearby school and not be made to flit from illegal colony to illegal colony or shanty to shanty. So those kind of issues one was trying to raise.
Right. I think I would
That's
be
it.
remiss if I did not bring in our chief economist, Dr. S.P. Sharma, also to share his thoughts with us.
Thank you, Kanikaji. Before expressing my viewpoint, I would like to invite my president, Shri Sanjay Agarwalji, to have some comments on the recent conversations. Please unmute.
Yeah. Thank you, Dr. Sharma. I think it's been a very, very, I would say, educative session for me to hear the experts from the industry who actually have done it and are doing it day and night, to the experts who are measuring it, and what is being done and how it is being done, and then they're able to quantify, and then they're able to make some projections. So I think we have a completely rounded session today, in the sense that we have we have every point of view that we could have on a single table, and I'm very grateful for that. My seniors, my former presidents, Rajiv Talwarji and Alok Shriramji, have both been very erudite in their worldviews, and the sort of issues that we as businessmen have faced, and the sort of solutions that we can offer are the practical solutions that we feel need to be done. For example, there was a list of suggestions that Alok Shriramji made, and I think I would be, counting most of them as what I have given in writing and what I've spoken about also. So I think we all as businessmen more or less have got similar views, because we face the same issues. And what Rajiv Talwarji has talked about, this housing issue, I think this people voting with their feet would be a different ball game if those people were living in a safe and secure housing, which was also not too costly. Because one of the reasons for migrant labor going back in times of difficulty is also that even temporarily they cannot afford those high rents. So which is exactly what Rajiv Talwarji has stressed about, 30 to 50 rupees a day in rental on government housing, which people would be able to afford on a sustainable basis, even if there is some temporary disruption in their employment or employability. So, these are the sort of issues that we as, trade and industry because we face them daily, we are able to bring them out very clearly, and we keep insisting for them. At the same time, the view from the economists and economist plus statistician that we have in Dr. Sen, I think that is something that is even more educative to us, because we know what we want to recommend, we know what we are facing, but the worldview that you gentlemen have and the way you look at these issues is again very, very educative for us and very interesting for us. One thing that I believe everybody on this panel would agree today on is this trend of increasing the import tariffs, which is unfortunately, if you look at it, this increase in import tariffs has a clear tendency of going up in case of primary products. These are the very primary products which have gone up from 50 to 300, even 200 or 300% over the last 1.5 years. And due to which the stock markets are roaring, because these companies are having stupendous, unheard of profits. On top of those profits, we not only have these import tariffs going up, but in addition, we have so many safeguard duties and protective duties being introduced. Now, we understand that the wheels of bureaucracy move slowly, but that bureaucracy cannot be blind to the fact that when they are passing an order today for a petition filed 2 years back, which said that I am facing difficulty in selling my steel or aluminum or whatever because of some imports. And at that time, he was not making profits because worldwide prices were low. And now, when today the downstream industry is not able to actually compete with the imports of the finished products, simply because these import tariffs plus the safeguard duties and all total up to a number which no domestic producer can really match. On top of that, the biggest difficulty is for the economy, for the employment to be really happening, as Alokji has said, that is our biggest job, to create employment. Who is the biggest employer? It is not the capital intensive primary product producer. It is a downstream industry, it is the MSMEs or even slightly bigger MSMEs, or those larger companies even which qualify as larger companies in the Indian scheme of affairs, but are actually small. These are the people who do not make primary products, but they are buying the primary product to make it and to make it to sell it into the Indian market or to export. In both cases, they suffer because there is such a high trade by duty barrier on these primary products that they are not able to sell. So that is again causing a substantial disbalance in trade, and loss to the employment in the country. So I think these are the issues which the chamber has been pointing out now for some time, and for which I would like to know the views of the economists. But then one major view, probably because this seems to be a no-brainer what I said, but what is not a no-brainer is why the demand is not being supported by the government in light of this huge difficulty that we have on the demand front in our nation. The large primary product producers might be making huge profits because if they are not able to sell in the Indian market because of lack of demand, they can export at a very profitable price. But the MSMEs who primarily sell into the domestic market are finding a huge downturn in demand. And the demand can be created only if there is work available in the market. And that demand, the first no-brainer would be for the government to actually implement what it announced on 31st December 2019, 1.5 years back, which was the 100 lakh crore national infrastructure pipeline. Now, how much is the actual expenditure? We hear senior government officials talking about 21 lakh crore out of that coming from the private sector, which of course is not happening at all. But what about the 80 lakh crore, the 79 lakh crore that the government was supposed to spend? Is not forthcoming. The ministries are cramping down on their expenditure. And at the same time, we hear talk about fiscal responsibility. We have $600 billion plus of forex reserves. And I don't know for what day are we keeping that when we can't. Countries like US or UK, they are giving 80% of salaries as dole during COVID times to their industry to support employment or to support demand. So neither we are getting employment support nor demand support. would, as economists, you two gentlemen, support the proposition of, if nothing else, if not too many handouts or doles, at least create the demand by spending what you have promised? So I think I would like to leave it at that. Thank you. Kanika.
Thank you, President Saab. Thank you very much. And today is a great learning day for me from my mentor, Dr. Pranab Sen, and my great economist friend, Professor N.R. Bhanumurthy. I am learning a lot on my day-to-day conversations with them. And I totally agree with the Professor Bhanumurthy that there must be strong correlation between ease of doing business and the economic growth, because we were growing in the difficult times. At the time of when ease of doing business was at 144, we were growing more than 7% and even 8%. But now the growth is bearing the difficult years. Growth was less than 6% in the 2018-19 also. So there is no correlation between the ease of doing business and economic growth. That is true. And I totally agree with the Professor Dr. Pranab Sen that statistics is more and more important. And my connotation is that there must be synchronization, because there are a lot of reforms during the last 30-40 years, starting from the 1991 advent of reforms when there was LPG model by Dr. Manmohan Singh. But there is lesser synchronization of the reforms between the center and the state, between Reserve Bank of India and the banking sector. Sometimes Reserve Bank of India is very, very proactive to reduce the repo rate, but that is not implemented by the banking sector. And similarly, central government is doing a lot in the reform process, but sometimes the reforms are not implemented by the states. So there must be great synchronization of the reforms between the center and the state, and the Reserve Bank of India and the banking sector. And of course, ease of doing business and the cost of doing business, as mentioned by our respected former President Shri Rajiv Talwarji and our President Shri Sanjay Agarwalji in their respective speeches, that ease of doing business will become fruitful only if the cost of doing business is reduced. Then the private investment will happen and a lot of employment will happen in the factories. So that will be the trajectory of the private investments and the employment creation at the ground level. So if the urban India is the great supplier, then there must be great demand in the rural economy also. So we have to come out with more and more reforms for the rural economy, so that our rural enterprises are becoming fruitful and more demand is there and private investment is happening in the factories. So that will be the great sustainable trajectory of the Indian economy. And our trajectory is great because we have moved from the slow growth from the 60s and 70s to steady in 80s and 90s, then fast in 2000, then fastest in 2010. But unfortunately, by the Lehman crisis and then with the great trade war between USA and China, and then pandemic COVID-19, our growth trajectory is impacted significantly. So we look forward more and more synchronization of the reforms and great connect of the reforms between the policymakers at the central level and at the state level, at the Reserve Bank of India level, and at the banking sector, core banking sector level. So thank you very much. These were my views on the today's discussions, and I thank our great economist, Dr. Pranab Sen, my mentor, and my great friend, economist N.R. Bhanumurthy ji, and our respected former presidents for providing their great connotations to reform more and more, so that our charts, our growth trajectory becomes visible in the international growth charts. Thank you very much. Thank you, Kanika ji, for giving me time.
Thank you, Dr. Sharma. I would now like to request my co-chair, Mr. Vikram Mehta, to please give the vote of thanks.
Has he gone for lunch?
Right, so I think
What
we
about
may have.
Mr. You want to try Mr. Anil Chopra?
Kanika ji, because he has provided the vote of thanks in the first session, so now SG, our SG, Saurabh Sanyal will be providing the vote.
Saurabh ji can give the vote of thanks and thank you everyone. Saurabh ji will do so.
Thank you.
Saurabh ji, yeah.
Thank you, Anil Chopra ji, our chair. Distinguished speakers, ladies and gentlemen, very good afternoon to all of you. I am standing between your lunch and the closure of the webinar, so I will not take much time. I wish to profusely thank Sri Amitabh Kant, our chief guest, who had graced the occasion, though slightly late, but he still came and opened the talks on a very candid note. I would certainly like to thank our President, Sri Sanjay Agarwal ji, who gave the presidential address and set the tone and tenor for this webinar, which was an extremely important webinar in today's environment of the COVID pandemic. Would like to thank Sri Anil Chopra ji for designing, evaluating, making this program, and this was the most important and effective program of the month, I would say, that the ease of doing business and uplifting the economic growth when we are coming out of the wave 2 of COVID, getting into a wave 3, maybe or may not be, and then slowly proceeding towards lifting our economy. It is a pleasure for me to propose the formal vote of thanks. I would like to sincerely place my gratitude to Dr. Pranab Sen for gracing the occasion and talking so candidly on the economy conclave. Professor N.R. Bhanumurthy, Sri Alok Sriram, our former president, Sri Rajiv Talwar ji, our former president, our president, Sri Sanjay Agarwal ji, our vice president, Sri Saket Dalmia ji, our chair of the committee, Sri Anil Chopra ji, our co-chairs, Sri Vikram Mehta and Ms. Kanika Sriram ji. I must thank the team led by our chief economist and DSG, Dr. S.P. Sharma, for putting up such a wonderful and organizing and coordinating such a wonderful program. With these words, I once again thank each one of you, and we wish to communicate to you that we will continue to have such programs every month and keep the members together and keep sorting out their minor and major issues as a Chamber of Commerce, so that the growth story of India, it starts from the house, it continues to a district, and thereafter moves to a state and then to the country. Thank you so much for being with us for such a long while. Thank you and Jai Hind.
And we are thankful to Kanika Sriram ji and Shri Vikram Singh Mehta ji for their financial support to organize this program. Thank you very much.
Thank you everybody.
Thank you so much, Kanika ji and Vikram ji.
Thank you, sir. Thank you, everyone.
Excellent moderation by Kanika ji and of course Anil Chopra ji.
Thank you, everyone. Thank you. Yes.